Good morning, baby. A little late, but we're here. Good morning. Good morning. What is cooking? Good looking? If you're new here, my name is Wet Willie. We go live all the time. We learn how to buy assets at Cashflow. So good morning. Good morning to you. It's good to see you. We're going to get after it. We're going to go buy some assets that produce profit. I'm going to walk you through a lot of what we talk about all the time, which is how do I get my money right to get my assets right, to get the profit right, to get me financially free. I'm going to cover a lot of that ground today. Good morning. It's good to see you. We are early in relation to the normal time that we start, but we are late in relation to the time that Dana would like us to start. So here we are, but we are here nonetheless. So if you're new here, good morning. It's good to see you. My name is Wet Willie. We go live all the time. We learn how to buy assets at Cashflow. Over here, I'm going to talk about really the high level of what we do. Then in a minute, we'll get into asset acquisition. We'll review deals together. I'll walk you through self-storage deals. I'll walk you through rental property deals, anything that you want to cover. We did a lot of foreclosure stuff yesterday, so I'm going to go through a lot of that. But good morning. It's good to see you. The high-level game is that we take our active income, we stage and stash that cash. We get it ready to go out there and buy assets and rinse, wash, repeat. So let's get into it now. Good morning. Good morning. The name of the game, active income. This is from your job or your business. You take your active income, what you're earning when you work, and you save and stash that cash. I'm going to teach you a framework on that in just a minute. We've talked about that framework earlier this week, but really, how do I decide where I'm going to save and invest my money? How do I figure out what I'm going to do with that? I'm going to walk you through how we think about that, and you can make your own informed decision. But we take our cash, we stash our cash, we get it ready. That money then stages here. It's accumulating interest, it's compounding, all this stuff, while I focus my attention on assets. An asset, by definition, is something that produces profit that doesn't require our time. So this can be a rental property, it can be a self-storage, it can be a foreclosure, it can be a laundromat, it can be a car wash, whatever you're into. You take your cash, you stash your cash, then you buy that asset. That asset kicks off profit, which of course allows you to stack more cash and get you to your next goal faster. If you've got two streams of income, saving and stacking cash, versus your one stream of income from your active income job or business, of course you can get to your financial destination faster, which is the entire thesis of what we talk about. How do I save and stack my cash to get ready to retire without waiting until I'm old? Good morning. If you're new here, my name is Will. We go live all the time. We learn how to buy assets at Cashflow. If you want to hang out with us every day, just come up there and tap on the follow button. We go live all the time. I'm going to walk you through a little bit of the overall idea. So let me just show you really the core, and then we'll get into this in a minute. But traditional financial planning doesn't work the way you think it's going to work. Traditional financial planning has you taking your cash, stashing your cash, getting it ready, and then you wait and you wait and you wait and you wait. And then one day when you're old, 65, 70, 75, 80 years old, then you can retire. Congratulations, you waited your entire life for some perceived financial future that may or may not come. So what we do that's different, instead of waiting until we're old to get income, we just get income now. And then I take the income now and I stack that cash, and I stack that cash, and I stack that cash, and I buy another asset, and another asset, and another asset. So I'm going to teach you this. I'm going to show you the math behind this, but it's really obvious. If I've got multiple streams of income from multiple assets compared to just one stream of income, who is more likely to get to their financial destination? That's the name of the game. So good morning. Oh my gosh, come over here. Let's get after it. If you're new here, good morning. My name is Will. We go live all the time. What's up? Good morning. Before I get into this, I'm going to show you how we find and evaluate assets. But let me know in the chat, where are you tuning in from? Good morning, Honda. My name is Will. I'm in Texas. Let me know in the comments where you're tuning in from. What state are you in? Good morning. I'm going to show you how we find assets in whatever state you're at. Massachusetts, Rwanda. Let's go. Good morning. Good morning, Massachusetts. What time is it there? 8:20? NSW. What is NSW? Good morning, New York, Alabama, California. Is it 5 a.m. there in Cali? Good morning. NSW, is that like New Zealand or like Australia area? Is that what that is? That's what I think it is, but I have no idea. Good morning. I'm from South Texas. Yeehaw, baby. Come on, South Texas. Good morning, South Texas. All right, so if you're new here, my name is Will. We go live all the time. We learn how to buy assets that cash flow. Here's the overall philosophy. Here's what we talk about all the time. What time is it there? So I'm in Austin, Texas. It is 7:20 a.m. Central Time. So what we do is we go out there and we buy assets. An asset, by definition, is something that produces income that doesn't require our time. So if I buy an asset, it should produce income without me. That's called passive income. In the comments below, let's brainstorm together. What are examples of assets? Let me know down in the comments. If I was in the comments, I'd write something like, I don't know, real estate? That's one. What are other examples of assets? Let me know in the chat. Real estate's one example of an asset that produces income that doesn't require me to be there. I don't provide the value, the real estate provides the value. Are there any other examples? Airbnb, yep, I can do a short-term rental. Let's call that an Airbnb. What other assets? Let me know in the comments. Let's brainstorm together. I could buy dividend stocks. That's going to provide me divvies. Bonds. I could have a bond. What are some other assets? What'd you say? Bus, truck, house. So let's just say like Turo car rental, equipment rental, some type of business where you're going to rent stuff out, self-storage, foreclosures. Good morning, Simply Vibing. So I could buy foreclosures. We evaluated those a lot yesterday. Self-storage, along with that, car wash, laundromat, so on and so forth. These are many different asset types. An asset, by definition, is something that produces income that doesn't require us to be there. So I can buy assets that produce passive income. How do I get financially free? Here's the game. When the passive income is greater than or equal to your personal expenses, whatever that means to you, you're financially free. So let's go through an example. Let's say, hypothetically, your personal expenses are $5,000 a month. If you buy an asset like Airbnb, like dividends, like real estate, whatever, and it gives you $1,000 a month in profit, in the comments, let me know, how many assets do you need until you're financially free? If I have an asset that gives me $1,000 a month and my personal expenses are $5,000 a month, how many assets do I need? Let me know in the comments. Good morning. Grant, what? How many assets do I need? Artem, 5. Simply Vibing. Rudy, how many assets do I need? Instead of asking yourself the question, how many years until I can retire, we ask ourselves the question, how many assets must I acquire? That's the name of the game. Artem, do we stop at 5? No, we keep going. Assets that produce passive income greater than or equal to your expenses, you're financially free. That's retirement planning 101. Income replacement. If the income comes in and it pays your bills, you can stop working. Does that make sense? Everybody with me on this? Type Y for yes if you understand. Type N for no if you have no idea what's going on. If you're on the toilet right now taking care of business, type T for toilet. Y for yes, N for no, T for toilet. Huh? Huh? Good morning. Yes, yes, comprende? Okay, come over here. Let's take a look at a couple of different asset types. I'm going to walk you through. How many of you want to learn about how to buy real estate even though interest rates are high right now? Type R in the comments. How many of you want to buy real estate? You're back again. Good morning. Good morning. How many of you want to learn how to buy real estate even though interest rates are high? We'll walk through that example. Toilet. Let's go, Leo. Let's go, Leo. Taking care of business. Real estate, real estate. Okay. Do you want to also look at self-storage today? We're just kind of building our agenda. You tell me what you want to cover. Do you want to evaluate self-storage today? We can talk. Bed. Let's go, Simply Vibing. Man, the bed is a vibe, by the way. So username checks out. Username checks out. All right, we'll get into real estate. We'll talk about storage if you want to. If you didn't get a chance, by the way, I've got a free class I'm teaching Saturday, August 8th. That's not tomorrow Saturday. It's next Saturday. The class is free. If you want to be there, I'm going to take you behind the scenes and show you how we find and evaluate assets. Multifamily, we'll get to some of that. How do I find assets? How do I evaluate them to make sure they're producing profit? And then number 3 is how do I practice buying assets without money? What? I'm going to show you how to do that. So if you want to be there, just tippy tap tap on this guy. There's a little button down here to register for the class. It's free. Saturday, August 8th. We're going to go evaluate some deals now. I'm going to take you behind the scenes of my private group, the Passive Income Club, and show you how we find and evaluate deals and practice buying fake AI-generated assets with fake money. It's not real, but that way you can practice over and over. It's online. It's all virtual. I'm going to be there. Let's go. So if you want to register, tap on this guy. It'll pop up. When it pops up, look. Looks like this. And then we're going to go look at another deal. When you're in the TikTok live, just tippy tap tap on this guy. Boop. When it pops up, it says class, how to get assets August 8th. So just go register right there. It's easy to do. Go do it right now. We're going to rock and roll and cover a lot of ground today. Let's go take a look at several other things. All right, cool. Come on now. Come on now. In person, online, it's all on Zoom. Let's go through this. Now, high level, let's understand this concept. How do I get retired without waiting until I expire? Let me show you this really quick. How many of you want to learn, if I can show you, how you retire on average in 7 years or less? Just say me in the comments, and I'll show you right now. I'll walk you through the math. It's not rocket surgery. Just say me in the comments. We'll do it live right now. Traditional financial planning says you have to be 65 years old to retire. No, you don't. That's something that was put together by the financial industry to sell you financial products. You stash your cash for 30 or 40 years. They make investment advisory fees, 1 or 2%. Offer your money for your entire life. They get rich, you stay broke. We don't play that game. Let me show you what we do. So traditional financial planning has you taking your cash, saving and stacking, saving and stacking, saving and stacking. And then you save and you stack. Are you retired? I've been financially free since age 29. I go live all the time and I teach you what I did. If you want to hang out with us every day, come up here and tap on the follow button. Good morning. So instead of taking our money and stashing our cash and waiting 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 until you're old, we don't play that game. The entire purpose of retirement planning is income replacement. Everybody type I in the chat for income, or give me the eyeball emoji. I, income, or eyeball emoji in the comments. What is the entire purpose of retirement planning? Income replacement. If you want to stop working, you need to replace income. That's not rocket surgery. That's not groundbreaking. We just got to get crystal clear. Let's go simply vibing. She's the one that follows instructions. Bonus, I got you. I'm going to get you some stuff. Shh. So what we do, if we understand that it's all about income replacement, then I take my cash, I save and stash my cash, and then I buy an asset. That asset, by definition, produces profit without me. So it provides the value to the marketplace, not me. I'm not trading my time for income. The asset gives me income. The asset provides the value. Cool? So I take my cash, I stash my cash, it buys an asset. How many streams of income do I have now? If it's me and my job or my business, that's one. But then I buy another asset. In the comments, let me know. How many streams of income do I have? What's 1 plus 1, math majors? Anybody study math? Advanced mathematics, algebra, differential equations, statistics. 1 plus 1 equals what? 2. Okay, that seems elementary, but stay with me. How much faster do you arrive somewhere if you're traveling twice the speed? Julio, how much faster do you arrive somewhere if you're traveling twice the speed? Instead of doing 35 miles per hour, you're doing 70 miles per hour. How much faster do you get to your destination? Twice as fast? Twice as fast, or half the time, correct? Is that how it works? This is what we practice. So I go out there, I stack my cash, I buy an asset. The asset produces profit. Then I take the cash from the asset plus from my job or business and I save that. I've got 2 streams of income. And then I take my cash, take my cash, take my cash, do it again. 1, 1, 1. Over and over and over. Now let's get to the gravy. You ready? Who do you think is more likely to reach their financial destination? The person with 1 stream of income or the person with 5? If you vote for 5, type 5. If you vote for 1, type 1. They both work the same job. They both make the same income. They both save and invest the same cash. One person, it's just them. The other person, they've got 4 assets. Who do you think is more likely? Exactly. Precisely. That's the game. That's what we talk about all the time. And if you want to hang out with us every day and learn about this stuff, just come up here and tap on the follow button. Let me show you the math, then we'll get to a deal. If you didn't get a chance to register, the class is Saturday, August 8th. It's free. I'm going to show you assets behind the scenes. Just tap on this guy. It's down in the corner. When it pops up, you can register. Good morning. Good morning. How do we get the assets? It's exactly what we talk about here, and it's what we're going to talk about deeply on Saturday, August 8th. Go get registered, but we're going to evaluate some real estate. We'll look at some foreclosures, and we'll look at self-storage today. So let me just show you the math really quick. Does it actually work that way? Yeah, it's math. So this is the guy working his job, saving and stashing cash. Hypothetically, he's saving $500 a month. Let's call it $6,000 a year. He does that for 30 years. If he gets a 10% rate of return, he gets to $1 million, and it takes him 30 years. The objective of this is not how much is he saving or what is his interest rate. The objective of this lesson is how do I get to the same $1 million destination but it not take 30 years? So everybody in the comments, let's get clarity on what we're focused on. Type D in the chat for destination. What we're going to try to figure out together is how do we get this guy retired with the same amount of money, that's his destination, type D in the chat, but it not take 30 years. Every variable is going to be the same, except we're going to change one thing. That's him acquiring assets. And then when he gets the assets, he takes the profit and saves and stashes it. How do I get to $1 million destination, but it not take 30 years? The question is not, is $1 million enough? Because it's likely not. That's not the point. How do I get to wherever I'm trying to get to without it taking so long? You ready? Watch this. The only change that he makes is he goes out there and he buys an asset. He takes the profit from the asset and he saves and stacks that cash. That gives him more money to save and stack. He gets to the same $1 million destination, earning the same interest rate. Everything's the same except the asset. Instead of it taking him 30 years, it only takes him 23 years. So one asset over his career saves him 7 years of work time. He can retire 7 years sooner by getting one asset. 10% interest, GTFOH. Like I said, some people are not going to do well following instructions. This is the point. You can have whatever interest rate you want. Microsoft went up 16% yesterday. I don't care about the interest rate. I need you to focus. You've had a hard time focusing your entire life. Now's a good time to try to lock in. How many of you are locked in? Type L in the chat. What did I say the point of this is? How do I get to the same destination? I only changed one variable. If this variable doesn't work for you, you can change your own. Does this make sense? Good morning. What got him retired faster? One asset. It allowed him to get to the same financial destination, but it saved him 7 years. Trying to lock in. Let's go, Simply Vibing. We got to get out of bed first. Good morning. So what if he continues this? I'm 66 and I don't have 30 years. Exactly. How many of you are 20 and you don't have 30 years? How many of you are 30 and you don't have 30 years? Just say me. How many of you are 40 years old and you don't want to wait 30 years to retire? How many of you are 50 years old and you don't want to wait 30 years to retire? This is precisely why we buy assets that produce profit. Does this make sense? If the entire point of retirement planning is income replacement, let's start replacing income now. Why would I wait until 65? How do I replace my income now? We buy assets that produce income. This is not rocket surgery. Good morning, Donnie Ballgame. I'm 30, but I don't have 30 years to retire. Who does? Everybody say, nobody. So how do I do it? We buy assets that produce income. Over and over and over and over. Can you explain the interest? No, because the interest is not the point. The point is we buy assets that produce profit. Lock in. What is our destination? Hypothetically, $1 million. How do I get there faster? By accumulating assets. So let's go buy another asset. I get one more asset. Same dude, same job, same income. He's got two assets. Instead of it taking him 30 years to get to his financial destination, he buys two assets. He takes the profit from the assets and he stacks it. Instead of it taking him 30 years to get to his financial destination, it only takes him 19. Two assets allows him to retire 11 years sooner. That's the point. Does this make sense? Type Y for yes, type N for no. Type Y for yes, N for no. How do I get there in 10 years? Jeffrey Muth, West Virginia, just did it. June 2026. Took him 4 years. April 2022 is when he started hanging out with us. June 2026. Come here. Sounds like we're having a little confusion this morning. All good. I love you. We talked about this earlier. If you're new here, my name is Will. I go live all the time. How do I get retired without waiting until I expire? Here's the formula. We buy assets. Those assets produce passive income. The passive income when greater than or equal to your expenses. How did Jeffrey do it in 4 years? 4 years and 2 months, to be precisely. Assets that produce passive income when greater than or equal to his expenses. That's the game. That's all it is. Hear me on this. Retirement planning is income replacement. Roth IRA, 401k, 403b, 457, whatever you're investing in, the entire point is to grow that thing big enough where it gives you income, right? Type Y for yes, type N for no. Is that the entire point of a 401k, Roth IRA? The entire point is it to grow and give you income, yes or no? Yes. If the entire point is income replacement, the only thing that we do different here is we get income now. That's it. That's all we do. That's how Jeffrey... So, how do you do it in 10 years or less? Which is, we do it about 7 years or less. You focus on the thing you need to be focusing on. Everybody and their mama is talking about, should I buy some of this? Should I invest in this ETF? Should I buy Google? Should I invest in Tesla? Should I buy Microsoft stock? That's not income. That's you're buying and you're hoping. I hope this stock goes up in value. We buy assets that produce passive income. Passive income, when greater than or equal to your expenses, you're financially free. What are assets? Real estate, Airbnb, self-storage, laundromats, whatever you're into. It doesn't matter to me. If you take the money and you buy the asset, it produces profit. If this guy buys an asset and he gives him $1,000 a month in profit, and his personal living expenses are $5,000 a month, how many assets does he need until he's free? 5. Instead of asking yourself the question, how many years until I can retire, we ask ourselves the question, how many assets must I acquire? Completely different question, which allows you to retire on average in 7 years or less. Good morning! Good morning! That's the game! If you're new here, my name is Will. I go live all the time and I teach you what I did. I've been financially free since age 29 from buying assets. If you want to hang out with us every day, come up here and tap on the follow button. I go live all the time and I teach for free. In just a minute, we're going to go look into assets. I'm going to take you behind the scenes and show you that, which is a little bit of a preview of what we're going to do August 8th. I've got a free class August 8th. I'm going to dive deep into different assets. If you want to be in that class, just type class in the comments. It's free. We're going to learn 3 things. If you type class in the comments, I'll show you how to register for free. Number 1, how do I find assets? Where are they? Where do I go to find the deals? I'm going to teach you that in the class. Number 2, just type class in the comments and I'll show you how to register. When I find the asset, to make sure it produces profit before I reach into my pocket and spend my money. Just type class and I'll show you how to register for free. And then number 3, the number 1 thing stopping people from getting started in anything, but specifically in buying assets, is fear, uncertainty, analysis paralysis, overthinking, all the stuff. I teach you how we take fake money, not real, and we buy fake AI-generated assets, also not real. That way you can practice buying assets without risk. What? That's why you overcome your fear by doing, it's called exposure therapy. We're not going to get into all that. Donnie ball game. Good morning. To register for the class, just tap down here. It's somewhere in the corner. There's a button that looks like this. When you tap on this button, it pops up and it just says class register August 8th, August 8th, next Saturday. So once you go get registered, Donnie ball game, once you go get registered, come back in the comments and say done. We're going to move on and go look at other assets right now, live. Class, yeah. There's a little button down in the corner. You see it down here? But think about it. If you practice buying assets with fake money, buying fake deals, but it's the same thing over and over and over again, do you think your fear would come down? Because you're doing it. You're practicing it. You get exposed to it. All the fears that you think is in your brain aren't really real. You're going, oh, wait a minute, it's not that bad. And you can practice over and over and over again. So when it becomes the real deal, you've done it hundreds of times. We'll talk about that on Saturday, August 8th. Good morning. Let's go look at some deals. Everybody registered that wanted to get registered? Say done in the comments. If you're registered and you wanted to get registered, say done. We'll go look at assets live right now. Done, done. Marlene, good morning. Good morning. Good morning, Marlene. My mom's name is Marlena, and everybody calls her Marlene. But that's not her name. Good morning. Be careful of the lies you tell yourself. Can we go a little deep real quick? Can we get to some money mindset stuff? I promise we'll get to assets. Can we do some money mindset stuff really quick? Let's think about this. Let's just think out loud together as I shift over here. If I am unhappy with my results in life, whatever that means to you, if I'm unhappy with my physical fitness, if I'm unhappy with my relationships, if I'm unhappy with my financial situation, if I'm unhappy with something in my life, and my thinking has led me there. My thoughts lead to feelings and emotions. My emotions lead me to some type of action or inaction, which leads me to a result. And then if I'm dissatisfied, and I'm the only one that would know this, if I'm dissatisfied with the results in my life, should I trust my own thinking? Yes or no? If my thinking has led me to an emotion, which has led me to an action or an inaction that has given me a result, if I am dissatisfied with my results, should I trust my own thinking or should I begin to question my own thinking? We'll talk about that. We'll get into that in a little bit, and I'll show you why. I'll give you a real story, and then I'll show you how we question it. If you are dissatisfied with your results in any category of life, the first thing we want to do is start questioning what we believe, even the deepest beliefs that we have. And then once you start to question those things and you start to adjust, you start to realize that there may be a different path. And if you can learn how to follow the path, it can take you to a different destination, gives you completely different results in life, which I'll show you in a minute. But let me get to some meat and potatoes, and then we'll come back to money mindset. If you're new here, my name is Will. I go live all the time. We learn how to buy assets at Cashflow. Good morning. Challenge your thinking. Challenge your thinking. Amen. That's how we grow. Donnie Ball Game knows. Donnie Ball Game knows. All right, let's get into this. Let me teach you behind the scenes of how we buy assets, even if interest rates are high. So I'm going to take you really quick. We've got environmental factors. We've got high interest rates. It's hard to buy assets and produce profit right now because interest rates are 6.5%, 7%, 8% interest, depending what's going on or where you're at. So you can't buy assets right now. People say you don't buy, you just wait. No. You buy real estate, then you wait. But let me show you how we do this. So we find this asset. This is a 3-unit complex. Residential, commercial. I call them up. I say, hey, I see you got an asset for sale. They say, we sure do. I say, that's awesome. It's for sale. How much money are you making? They say $6,000 a month in income. Everybody in the chat type 6. That's going to be relevant in a minute when we try to figure out if we're going to make profit. So type 6 in the comments. How much money are you making? $6 grand? Oh! I go, okay, that's great. I appreciate you telling me that verbally, but can you prove it? Can you prove it? Can you please send me, what would I ask them? Please hold. What would I ask them to send me? I want them to verify their income. How would I get them to verify their income? Yeah, I know. I'll be with you in just a second. How would I get them to verify their income? They told me verbally they're making $6,000 a month in income, but I don't know that that's real. You can say anything on the phone. Yeah, I know. I'm going to get with you in just a second. What would I ask them to send me? Profit and loss statement? Hey, can you send me your profit and loss statement? Can I look at your books? Anything else? What would I ask them to prove to me they're making the income they say they're making from their rental property? They've got a residential commercial. They say they're making $6,000 a month in income. I know. I'm going to get you in a second. I'm trying to talk with my team. Bonjour? Hey, can you send me the bonjour? What? I don't know what that means either. Tax return? Okay. Profit loss statement, bank statements, lease agreements, rent roll, all of that would work. Yeah, can you send me any of that stuff? All that would work. Tax return is the true litmus test. If it's not reported on the tax return, they probably didn't earn it. You do this stuff a lot when you buy businesses, and they say, we did $100,000 in cash. I dealt with this on a country club we were going to buy in Iowa. They tried to tell us they did $100,000 in cash. I go, okay, cool. Well, let me see your tax return. They go, oh, it's not on the tax return. Got it. Okay. So let me get this straight. I didn't push it. I'm not going to report them to the IRS but if you're not willing to pay tax on it, you probably didn't earn it. And I'm not going to pay for it. Therefore, I want you to prove you can make your income. It's French. Yeah, what does French have anything to do with this? So yeah, send me your bonjour. So they're going to send me their rent roll, their lease agreement, their profit loss statement. I could make a contingency offer contingent on tax returns, verification of that with my accounting team, whatever. At this point in the journey, I have verified income based on some of the stuff that you've asked for. They're making $6,000 in income. Oh my gosh, I'm in. So I go to my lender. I say, hey, Mr. and Mrs. Lender, can you give me a loan? They say, sure, we got you pre-approved at 6.5%. I say, skadoosh. Let's get it, baby. $6,000 a month in income. I got a loan. What's my mortgage? He said, your mortgage is going to be $6,130 a month. I said, wait a minute. In the comments, let me know what's wrong here. If I'm bringing in $6,000 in income, but my mortgage payment is $6,130, what's the problem there? Let me know in the comments. $6,000 in income, mortgage, $6,130. Martin J. Lawrence, in his famous philosophical piece, National Security, said what the problem is. What's happening? What's the issue here? Net loss, no profit. Interest rates too high. You can't buy real estate right now. Interest rates too high, 6.5%, which obviously is negatively impacting. I'm losing, if I buy this asset, I'm losing $130 a month. That's before repairs. That's before any kind of improvements, toilets, water heaters, anything like that going on. I'm already losing money. And this is why you can't buy real estate right now, because the interest rates are too high. I mean that's what they say, but what can we do about it? Check this out. I don't know if you can read the blue text from your side, but over here it says, blue text, assumable FHA mortgage. What? They have an assumable mortgage. So let's break down these words. Assumable mortgage. Mortgage is the debt on the asset, assumable. That means instead of me taking my down payment and going to get outside financing from a lender, I take my down payment, I give it directly to the seller. I say, I want the keys to your house and I'll just take over your mortgage. He says, okay, cool. What? I just take over his mortgage. He got his mortgage 5 years ago. So I don't pay today's interest rates of 6.5%. I pay 5 years ago interest rates of what? 3.5%. Oh! Everybody understand what we just talked about. Type Y for yes, type N for no. Instead of me going to get outside financing, I can simply look for the type of mortgages that I can just take over. I can talk to the sellers, call their mortgage company, say, do they have the type of mortgage that he can transfer to me so I don't have to get outside financing? That's what an assumable mortgage means. Cool? So I take my down payment and I give it directly to the seller. Instead of getting 6.5% mortgage, I get a 3.5% mortgage because that's what his mortgage was 5 years ago. My new mortgage payment is $4,814. How much am I bringing in? $6,000 a month. What? $6,000 a month minus $4,800 mortgage means I take an asset that previously was losing $160 a month in income and I turn it into an asset that makes a profit of $1,186 a month. Did you see what we just did? Type 1 for yes, type 2 for no. We took an asset that previously was losing $130 a month and we turn it into an asset that makes profit. Same economic environment, same political environment, same situation that everybody else is dealing with. It's how you think about these assets. There's plenty of cash flow, there's plenty of profit everywhere, but you got to know how to approach deals. You took the same asset that everybody passed on and you found profit. That's the name of the game. We're going to go through more assets. If you didn't get a chance to register, we've got a free class we're doing Saturday, August 8th. I don't do these classes often, but they are free. If you want to be there and learn how we buy assets that produce profit, just type class in the comments. We're going to move on. I'm going to teach you how we find these deals live right now. I'll walk you through some of the structures and deals that we did. If you want to be in the class, it's free. Just type class in the comments. We're going to learn 3 things. It's Saturday, August 8th. Not this Saturday, not tomorrow. Next Saturday. If you want to be there, just type class. 3 things. Number 1, how do I find assets that produce profit? I'm going to teach you how we find them. Number 2, when I find it, what do I do with it? I'm going to show you our process to evaluate deals to make sure they produce profit. And then number 3, everybody has fear, overwhelm, uncertainty, analysis paralysis. How do I start practice buying fake assets with fake money? I'm going to give you fake money and I'm going to show you how to buy fake AI-generated assets so you can practice the entire flow of a deal over and over and over again in virtual reality. So if you make a mistake, you just reset the game and you start over. That's exposure therapy. You overcome fear by practicing buying fake assets. Oh, class, let's go. All right, to register, the class is free. If you want to register, just go down here. There's a little button in the corner. It looks like this. Just tap on this guy. When it pops up, it'll say class register. Go register now. Side note, it's hosted on Zoom. Why? So I can share my screen and show you deals behind the scenes. However, I only have 200 spots. So if you can't be there Saturday, August 8th, please don't register. I don't want you to take a spot for somebody else that can be there. Cool? Make sense? Awesome. Awesome. You get a federal tax break for contributing a certain amount to your retirement plan. What does that have anything to do with getting financially free? We'll talk about this. Yeah, when you put money into a tax-deferred, aka delayed account, you get to deduct that on your taxes. My name is Will. One of the assets I own is a CPA tax firm. I'm in all 50 states. Let's talk about tax savings. Sorry, not tax breaks, just a refund. No, that's not it. It's called a deduction. Everybody type D in the chat for deduction. You were close. You were closer the first time. Come here. Check this out. Let's talk about this. Okay, so I think what you're saying is that if you contribute money to a tax-delayed or deferred account, like a 401k, like an IRA, like a 403b, like a 457, like a SEP, like a solo 401k, you put the money in there, you get a deduction off of your taxes. Good morning! Good morning! Oh my gosh, you can't watch my show Good Morning Kentucky. So is that a good thing? Is that a good thing? There are more 401ks in the United States than there are homeowners. So it's very popular. In your opinion, let me know in the comments, in your opinion, if society is all doing the same thing, is that a good direction for you? Type G in the chat for good, type B in the chat for bad. If everybody in society is doing one specific thing, is it probably a good idea for you to follow society or a bad idea? You let me know. What has been your life experience up to this point? If society, if everybody's doing it, is it the... What do we think? Good news or bad news? Good. Good? If everybody in society... Good morning, Pittsburgh. If everybody in society is doing one thing, that's probably a good idea. Remember what George Carlin said. George Carlin said, the great comedian, said, think about how stupid the average person is and then realize that half of them are stupider than that. Just take an inventory. Let's get some knowledge on the board. You ready? Here we go. So if I take money, let's first understand how this works. Let's understand what a deduction is. So a deduction, if I contribute money to a tax-deferred account, like a 401k, like a 403b, like a 457, if I contribute, let's say $1,000 into a 401k, I get what's called a deduction. So let's say hypothetically, my income in this situation is $50,000 a year. That's my income. But I made a contribution to my 401k. IRS says that is now deductible. So I would subtract $1,000 because I've got a deduction from my taxable income. My new taxable income is going to be $49,000. That's what a deduction is. Everybody understand this. Type D in the chat for deduction. Type D in the chat for deduction. So contributions to tax-deferred accounts, which means you will pay tax when you take money out of that account. Cool? Like your cut. Come on, Mr. Phil. Good morning. Appreciate you. That's what a deduction is. Cool? Can I go over depreciation? I'll get that next. Great question. If you're new here, by the way, my name is Will. I go live all the time. I heard D, I'm here. Oh my gosh. Good morning, Sarah Gibby. Dude, she is a sucker for the D, I tell you what. So if you're new here and you want to hang out with us every day, there's a follow button somewhere up here. The question was about, yeah, but a retirement plan allows me to deduct it from my taxes. I get a tax incentive. Okay, let's talk about that. Let's talk about tax delay. Now that we understand deduction, we'll get to depreciation next. Now that we understand deduction, let's really break down the entire life cycle of you contributing to a retirement plan. You ready? So let's say, hypothetically, you put $10,000 into a 401k. When you contribute $10,000 to a 401k, you can now deduct that $10,000 off of your taxes. Let's say, hypothetically, you're at a 20% tax rate. Because you deducted this from your taxes, you don't pay tax on that $10,000. So 20% times $10,000 means you save in the year of contribution $2,000. Everybody with me on the tax savings. Type Y for yes, type N for no, so I know we got it. If I put $10,000 into a tax-deferred account, I deduct this from my taxes. I don't pay tax on the 10 grand. If I'm at a 20% tax rate, 20% times 10 grand means I would have paid $2,000 in taxes. But because I put it in there, I don't, so I save $2,000 in taxes. Now let's continue on with the life cycle. That $10,000 goes into my 401k. What is the reason that we put stuff in 401ks? So that it grows. So if my $10,000 contribution, meaning the money I put in, grows over time, given enough time, 10 years, 20 years, 30 years, 40 years, given enough time, it's going to grow to something. Well, let's just say it grows to, I don't know, $30,000? I think we can go much higher than that. Let's just call it 30 grand. When I take that money out of my retirement account, I have to pay taxes on it then. And if I pay taxes on it then, of the same amount, what is my tax bill going to be? So let's take a 20% tax rate. 20% of $30,000 is how much? Anybody know? I have a $6,000 tax bill. What? I have a $6,000 tax bill. That's due when I take the money out. How much did I save though? You saved $2 grand. Wait a minute, what? When you put the money into the account, you save $2,000 off your taxes that year. But then over time, that money grows, which is the entire purpose, right? When you take that money out, because it grew, you have a bigger tax bill than you actually saved. Does this seem like a good idea or a bad idea? Type G for good. Type B for bad. Does this seem like a good idea or a bad idea? The reason that Uncle Sam gives you tax incentive to contribute to 401ks and IRAs, the reason that your contributions to these accounts are much, much higher than Roth IRAs, which has a maximum account or contribution of $7,500 a year, is because that's where Uncle Sam wants you to put your money, because he has a tax lien on your account. So you made $14,000. Can you make $14,000 in other ways too? Yeah. Do you work for the IRS? I just want you to understand the question that I'm answering was, yeah, but if I put my money into a retirement account, I get a tax incentives. Do you? Is it an incentive where you pay more in taxes than you saved? Is that an incentive? Is that good? Where I come from, $6,000 cost is worse than a $2,000 gain. What's my net return from a tax perspective? My net return is negative $4,000. How is that a tax incentive? What? Oh, side note, whenever you pay taxes on this, you're in retirement, because that's the idea. You're in retirement and you have no active income. So your tax bills that you pay come from your nest egg that you saved, which means that you deplete your nest egg, your retirement fund, you deplete it faster. You have no active income. So you're paying tax bills with no active income. You're pulling it down faster and faster and faster. So really, you're not funding your retirement, you're funding Uncle Sam's, respectfully. I'm having a hard time understanding where the tax incentive comes from if you're losing $4,000 on this transaction. How is that? Maybe I'm the idiot. Maybe I'm the idiot. I don't know. That we can't remove that from discussion, okay? Good morning. If you're new here, my name is Will. I go live all the time and we learn how to buy assets at Cashflow because that's how you actually get freedom. If you want to hang out with us every day, come up here and tap on the follow button. I go live all the time. Let's go. What we were just talking about is how we find and evaluate assets. What do I suggest? Number one, I don't know anything about you. Listening to me can be hazardous to your health. It can cause indigestion, upset stomach, heartburn, diarrhea. In rare instances, listening to me on TikTok Live can cause it to last longer than 4 hours. If it lasts longer than 4 hours, please reach out to a medical professional, Sarah Givens or Gotham Dark Knight. I can't help you with that. However, here's the formula that we follow. You ready? Good morning, Tracy. Good. That's my disclaimer. That's my disclaimer. Here's what we talk about all the time. So in case you're new here, we buy assets. Those assets produce passive income. Passive income, when greater than expenses, you're financially free. You don't have to wait until you're 175 years old to retire. Watch this. If I buy real estate or self-storage or laundromat or car wash or whatever you're into, and that asset gives me $1,000 a month in profit, if my personal living expenses, rent, mortgage, groceries, utilities, car payments are $5,000 a month, in the chat, let me know, how many assets do I need until I'm financially free? If I have an asset that gives me $1,000 a month in profit and my personal expenses are $5,000, how many assets do I need until I'm financially free? So what do I suggest? I suggest instead of asking yourself the question, how many years until I can retire? I suggest you ask yourself, how many assets must I acquire? If you get one asset per year and you only need 5 assets, how many years until you're free? Ask a different question, you get a different answer. Good morning. If you want to hang out with us every day, come up here and tap on the follow button. I'm going to get to showing you how we find these assumable mortgages, how you can find these deals. While I pull that up, if you didn't get a chance to register, I've got a free class. If you want to be in the class, it's Saturday, August 8th. Just type class. Assets, let's go. Let's go, Hot Cappy. If you want to be in the class, just type class in the comments. It's free. I've only got 200 spots. So if you can't be there Saturday, August 8th at 9 a.m. Central Time, 10 a.m. Eastern, please don't register. You would block a spot for somebody else. We're going to learn 3 things in that class. Number 1, how do I find assets? Where are they? Number 2, when I find them, how do I evaluate them? How do I know it's going to produce profit before I reach into my pocket and spend my money? And number 3, what if I have fear, uncertainty, overwhelm, analysis paralysis, all of the things that stop people? What do? I'm going to teach you how we take fake money and buy fake AI-generated assets so you can practice the entire deal flow over and over and over again as many times as you desire so you can practice without risk. If you want to be in that class, type class in the comments and I'll show you how to register. But let's get back to this. We walked through finding this asset. It previously was going to lose $130 a month and we turned it into $1,100 a month in profit. Class, okay, to register for the class, it's free. Just go down here and tap on this little button. There's a button somewhere down here. It'll pop up. When it pops up, it says class, Saturday, August 8th, and that's how you register. And you have to register kind of twice. The first page, name, email. I'll email you the registration info. I'll remind you all that stuff. The next page is how you get the Zoom information. It's on Zoom. That's why there's only 200 spots, but it allows me to share my screen. Once you get registered, say done. I'm going to go teach this while you get registered. Good morning. Good morning. All right. So we turned this into profit. The reason we turned it into profit is because we found a deal. We took over somebody's mortgage at 3.5%. The next question naturally that I get is how do I find these deals? Done, Hot Cappy. I'll see you there. How do I find these deals? I'm going to show you right now. So how do I find real estate properties or deals that I can just take over a 3% loan? Come here. These are deals that we've done before. I'm not going to go through all of this. There isn't a give and a take on these deals. sometimes the down payment can be quite high because you're going to have to pay for somebody's equity. I'll talk about that next. This is very simple. I took over a 2.6% loan, but the down payment was $65,000. That's some of the give and take depending how much appreciation they had in the asset. But here's how you do it. It's really simple. This is not rocket surgery. You go to Zillow. Zillow's free. You might have to log in. If you want to log in class, to register for the class, just tap on this guy. It's somewhere down here. Good morning, Angel. Good morning, sunshine. Just tap on this thing somewhere down there. That's how you register. The class is free. You go to the More tab. In order to see the More tab on Zillow, you might have to log in, but Zillow, again, is free. Doesn't cost you any money. Go to Zillow, click on the More button. Red arrow, red circle. You can't miss it. When you go to More, you're going to scroll all the way to the bottom. When you get to the bottom, it's going to say keywords. Assumable, transferable. You're going to play around with the different keywords. Just don't play with it in public. I did that, and I'm still... When's my court date? Okay, August 15th. Okay, don't play with it in public. Apparently that's frowned upon. Local coffee shop tried to get some Wi-Fi. I was playing with it in public. They don't like that. Anyway, learn from my mistakes. Okay, here we go. Assumable, transferable, owner finance, seller finance. Those are the key words you're going to play with. Good morning, Joe. Those are the key words you're going to play with. You can also pair this with days on market. Naturally, obviously, if somebody's trying to sell a thing and they can't sell it in the time frame they wanted to sell it in, they may get a little itchy, more negotiable. So 30 days, 60 days, 90 days or longer. The longer it's been on the market, the itchier they get, the more likely they would to negotiate with you. Better deals happen that way. Have these two things. Days on market, keywords. Here's what you find. These are actual screenshots of actual deals on Zillow. It searches the listing and it says owner financing, dueño a dueño, owner to owner. Seller financing. Those are other ways that we can buy assets. This is an actual deal. There's an actual listing. Done. I'll see you Saturday, August 8th. Let's learn how to get assets at Cashflow. I'll see you in the free class. A 4% assumable loan. That's right, 4%. What? Ojos, down here, 4% loan. Instead of buying at these interest rates of 6, 7, 7.5%, we just take over these, and it's on Zillow. Easy to find, all free. 2.875%. Can y'all see this? Somebody type 2 in the chat. 2! What is the interest rate? Under 3. 2.875% assumable loan. Actual listing. If I could tap on this and it would pop up, you could see the actual listing yourself. 2%. 2.875. You don't have to buy at 6 or 7%. Assumable 2.25% VA loan. I don't know if you can see this, but it says VA loan. Question, pop quiz. Do you have to be a veteran to take over a VA loan? Y for yes, N for no. Do you have to be a veteran to take over a VA, Veterans Administration loan? Y for yes, N for no. What say you? If you're new here and you didn't get a chance to register, I've got a free class teaching how to buy assets that produce profit. I've been buying assets since I was 20 years old. If you want to be in the class for free, just tap down here. The answer is no. You do not have to be a veteran to assume to take over a VA loan. What? You do not have to be a veteran to take over a VA loan. However, if you are a veteran of these streets, come on, Jonathan. If you are a veteran, you would sign one extra document releasing the VA benefits back to the veteran that's transferring this debt to your name. Cool? But you don't have to be a veteran to take it over. Assumable 2.25% VA loan. Come on now. I want you to understand a little bit things about the law. The law states that FHA and VA loans have to be, by law, assumable. They have to be. Not all loans allow loan assumptions, 100% correct. But by law, just two, FHA and VA, there's more, but by law, just two examples, FHA and VA loans have to be assumable. That's what the law states. So if you find an FHA loan, just know. If you find a VA loan, just know. Let's continue. This is Sarah's house. Good morning, Sarah. This is Sarah's house. She sits on her couch. She drinks her coffee overlooking the hill country. Assumable financing, 2.25%. What? If you tapped on this listing, it would take you to this house. That's how you find the deals. It's not rocket surgery. This is not brain science. Good morning. That's my house, the view, the pool, all. She skinny dips in there every morning with the skinny marg. Every morning? I don't judge. I do not judge. Skinny margarita? That means you can have more margaritas. I think that's how it works. I think we're just going for volume here, ladies and gentlemen. Good morning, truth, let's go. Good morning. If you're new here, my name is Will. We're gonna get into another asset. If you wanna hang out with us every day, come up here and tap on the follow button. Let me just kind of recap some of the stuff that we talked about in case you just got here. Come over here, check this, good morning. In case you just got here, here's the overall philosophy. We kind of broke down why saving and stacking cash in tax-deferred accounts may not be the most brilliant thing you can do. But let's get into our philosophy. Whether you agree or disagree with me, I just want you to understand what we talk about all the time. Because oftentimes, people are like, what on earth is going on in here? Here's what we do. We buy assets. Assets produce passive income. How do I retire without waiting until I expire? How do I retire on average in 7 years or less? This is what we do. When the passive income is greater than or equal to your expenses, you're financially free. So let's brainstorm together. What are examples of assets? Let me know in the comments. What are examples of assets? I'll kick us off, but you tell me more. Real estate is one asset that produces income. Our definition of asset is something that produces income that doesn't require us to be there. What are other examples of assets? Stocks, so specifically dividend stocks. Good morning, Jeffrey, because we want it to produce income. What are other examples of assets? Gold. How does gold produce income? Our definition, assets that produce passive income. I'm not saying don't buy gold. How does gold produce income? Ice vending machine. What are other assets? Net worth is not an asset. An asset, by definition, is something that produces passive income. What are assets that I can buy that produce income that don't require me to be there? Self-storage. Vending machines. Vending. Barbershop. I could buy a business. Maybe I could buy a business. What are other assets that I could acquire? Rental car, Turo. So I could rent stuff, equipment, cars, Turo business, Steven. Laundromat. All of these are assets that don't require me to be there. Coin laundry, 100%. Turo, let's go. Turo. We got to put some exclamation points on there for Jeffrey. Rental parking lots, 100%. And we keep rocking. Assets that produce passive income when greater than expenses. You ready? Daycares in Minnesota. Good morning, Linda. Good morning. Now let's say hypothetically that I've got personal living expenses of $5,000 a month. If I go out there and I buy a self-storage facility, that gives me $1,000 a month in profit. Chat, how many assets do I need until I'm financially free? Huh? How many assets do I need until I'm financially free? I have an asset, storage. Storage gives me $1,000 a month in profit. Personal living expenses are $5,000. How many assets do I need? That's the question you ask yourself. If you want to retire without waiting until you're 150 years old, instead of asking yourself the question, how many years until I can retire, we ask ourselves, how many assets must I acquire? That's the game. Cool? We're going to go look at some more deals live right now. I'm going to teach you how to find and evaluate assets. If you want to be in our free class, Saturday, August 8th, just type class in the comments. Just type class, and I'll show you how to get registered. It's free. We're going to learn how to find assets that produce profit, and then I'm going to teach you how we take fake money and then buy fake AI-generated assets. The class is Saturday, August 8th at 9 a.m. Central Time, 10 a.m. Eastern. If you want to be there to register, you have to register. It's free, but you do have to register. Cool? That $5,000 is only expenses you have, correct? In that example, yeah, that was their living expenses. Rent, mortgage, groceries. Class, okay. What about billboards? Absolutely. We did a real estate deal in Jacksonville, Florida that had billboards on it. It was just like ancillary, as extra. We're like, they all got billboards too? It's extra cash flow, baby, for sure. If you want to be in the class, just tap on this guy. The class is Saturday, August 8th at 9 a.m. Central Time, 10 a.m. Eastern. If you want to learn how to buy assets that produce profit, that's what that class is about. It's free. I don't do this class very often. It's not this Saturday, it's next Saturday. It's going to be hosted on Zoom, so I can show deals behind the scenes. I can teach you how we find them and evaluate them. And then we practice buying them with fake money, buying fake assets. Class! If you want to be there, just tap on this guy. Understand, number one, I don't have unlimited capacity. Because this class, we just tap on this button, which is down in this corner, because this class is hosted on Zoom, there's a limit. There's only 200 spots. So if you can't make it, please don't register. I don't want you to take a spot for somebody else. So it's Saturday, August 8th at 9 a.m. Central Time, 10 a.m. Eastern. Good morning, sweet face. So if you want to register, tap on this guy. It looks like this, and then let's get back to this deal. When you're in the TikTok live, just tap on this guy down at the bottom. Boop. When it pops up, it says class, how to get assets right there. That's how you register. Cool? And then on the next page, it takes you to the Zoom information. Fill that out, and Zoom will send it to you directly. So you've got all the information to be in there. But understand there's only 200 spots, so please don't take it if you can't be there. Cool? All right, here we go. How many of you want to learn how to buy foreclosures? How many of you want to learn how to buy foreclosures? I'll show you how to do that in 5 steps or less. And then if I'm feeling funky, which I'm feeling kind of funky. If I'm feeling funky, maybe I'll show you, maybe I'll test it live. We'll go find a live deal. All right, let me show you the benefits of foreclosures, then we'll take inventory if we want to learn about this. All right, so let's talk about this. How do I find and evaluate foreclosures? I'll show you. You're always funky. Shelly, good morning. Man, I'll tell you, Charleston was beautiful. It was so nice. Just loved the beach. Does Charleston have a beach? I don't know. Good morning. Good morning. All right, so check this out. Let's say somebody buys a house. And let's say, rude, let's say they get a 30-year mortgage. If somebody buys a house and they get a 30-year mortgage and they make the minimum payment on that mortgage for 30 years, 30-year mortgage, they make the payment every month, never missing a month, and they do that for 30 years, what would their mortgage balance be after 30 years? Let me know in the comments. It's not a trick question. It's not a trick question. Somebody gets a 30-year mortgage, and they make the payments, and they make the payments. 30 years from now, what's their mortgage payment? What's their mortgage balance? 0. They've paid it off. They've paid it off. Their mortgage balance is 0. Everybody type 0 in the chat. They've made the minimum payment for 30 years. After 30 years, there's nothing left to pay. It's paid off. At that exact same time, when they've had this house, let's say the value of the house has gone up, right? How do foreclosures work? Well, if I find a foreclosure at the 15-year mark and the debt has been paid down, the opening bid, good morning, Vital Living, let's go. I got you, girl. The opening bid is going to be the remaining debt. So you go to foreclosure auction, which I'm going to teach you in just a second. You go to a foreclosure auction, whatever the remaining debt on the property, good morning, Cancel Money Man Myers, good morning. The remaining debt on the property is going to be the opening bid. So JP Morgan National Bank, Wells Fargo, Mr. Cooper, Rocket Mortgage, the lender on that property is going to get first bid. Then you and I have the opportunity to get next bid. I don't know if I should bid on it, but I did look up the value of the property. The value is up here. If I bid and I win, I own it for what it's worth up here, the value. But what did I pay for it? Down here, the remaining debt. That gap in foreclosures is called profit. Everybody type P in the chat if we're on the same page. This is the power of buying and evaluating foreclosures. Good morning, Bingo. You got a haircut, looks nice. Appreciate you, girl. Oh, excuse me. Everybody type P in the chat for profit. Oh, this is why we can focus on foreclosures. How many of you want to learn how to find and evaluate foreclosures in 5 steps or less? Type 5 in the chat. I'm sorry, sweet face. I'm a sucker for a compliment. Bingo, I'm going to live on that for 30 days. I don't even need protein. Come on now. Maybe I need some carbs, though. You hear me? 5. Okay, I'm going to do that next. I like that P. Sarah, lock in. Oh, my gosh. I took Sarah out for margaritas one time, and look at her. 5, 5, 5. Okay, I'm going to show you how to do this. I just want you to understand we're going to go deep into this. Good morning. What's up, McNutterbutter? Good morning. Top 3 usernames I've ever seen. What's up, McNutterbutter? We're going to take a look at an actual foreclosure announcement. Nice shirt. Appreciate you. Shoot. This is a foreclosure announcement. I'm going to teach you in 5 steps or less how to find and evaluate deals. If you want to dive deeper into this, that's our class on Saturday, August 8th. It's at 9 a.m. Central Time, 10 a.m. Eastern. To register, just tap down here. There's a little button, looks like this. You can register for free. Let's go do this live right now. Step number 1, if you want to find foreclosures, and feeling funky, if you want to find foreclosures in 5 steps or less, in the comments below, what state are you in right now? Let me know. What state are you in? I'm going to teach you how we find and evaluate foreclosures in 5 steps or less. But you got to tell me what state you're in so I can help you find these deals. 5 steps or less? Where are you at? Florida, North Carolina, Connecticut. Good morning, Melissa. Where have you been? State of confusion. How many of us are in denial? Confusion. Good morning. Missouri, Minnesota, Tennessee. Good morning, California. My name is Will. I'm in Texas. Nice to meet you. If you want to hang out with us, just tap on the follow button. Good morning, Oklahoma. I love you now, but I'm not going to like you during football season. Good morning, Kansas City, Missouri, Texas, Alabama. Massachusetts, good morning. Good morning, Kansas. Good morning. Hawaii? Blackface, are you in Hawaii? Is that what that means? I like it. Is that H-A? Is it H-I? I think it's H-I. Oh, boomer, I dig it. Ohio. Detroit. Step number 1 is you're going to go to the internet and you're going to search, who? You have to say it that way, Georgia. Who? Good morning, brass man. Who maintains property records in Texas? Who maintains property records in Virginia? Who maintains property records in New Jersey? Who maintains property records in Tennessee? You're going to search to see who maintains property records. If you want to find foreclosures in your area, you need to find out who by law is in charge of maintaining property records. Who maintains property records in Florida? I see you, Palm Springs. In my state of Texas, I'm going to go to my source. That's the county clerk's office. In Texas, Louisiana, they don't even have counties. So it's not going to be the county clerk for them. It might be a sheriff's auction like in Ohio. Judicial state versus non-judicial, depends. So step number 1 is who maintains property records in Nevada. Step number 2 is you're going to figure out who that source is. Well, then we're going to search the source and go find number 3, which is the list. I want to find the list of foreclosures. If you're new here, I'm teaching you live in 5 steps or less how to find and evaluate foreclosures. And then if you want to, if you're feeling funky, if you want to, we'll take what I teach you and we'll test it live. How many of you want to do that? Type funk in the chat. Y'all feeling funky? Just type funk. Maybe, it's easy for me to yap and teach. Does it work though? If you want to, just type funk. Maybe we'll go do it. Step number 1, who maintains property records? Step, funk, let's go! Who got the funk? You got the funk. What's that smell? Good morning. So we're going to practice on this one, and then if we like it, we'll do it again. And I'll go to the internet, and you had me at, I'm feeling funky. Good morning, Friday. Good morning. Then we'll test it live. I'll go to the internet, I'll search and practice everything that I do. But this is an actual foreclosure announcement. In the state of Texas, this is what they look like. And it also probably going to look like that in your state or be very similar. So let me teach you live. Notice the substitute trustee sale. Let's read this together. Notice is hereby given that a public sale at auction of the property listed herein will be held at the date, time, and place. Oh, this is a foreclosure announcement. This is what they look like. It's got the date. First Financial Bank. It's got his name. Oh! Now, what do I need from that? There's some information that I need from that foreclosure announcement. I got to pull that information to help me evaluate it. So step number 4. What is, in the chat, let me know. You may be new here, you may not know, but if you know, when Sarah Gibbons wakes up first thing in the morning, what does she look for? What is the first letter? Don't say the whole thing. What is the first letter that Sarah Gibbons looks for when she wakes up in the morning? Does anybody know? If you know, type it in the chat. What's the first letter of the thing that Sarah Gibbons, when she wakes up first thing in the morning, what is she grabbing? Her vape? No. Her phone? No. Does she go tinkle time? Does she go potty? No. Everybody type D in the chat. When Sarah Gibbons wakes up first thing in the morning, she is looking for the D. Everybody type D in the chat. I don't know why she's built this way. It's just the way she is. She's looking for the D. Now, we're not going to look for the same D. That's Sarah's thing. She can do what she's going to do. We're going to look for the D too, but it's going to be the debt. The debt. The debt. Sarah's looking. Melissa. Oh, Melissa. Everybody say Melissa. Lock in. Oh, I'm from Palm Springs. I can't look for the D. We just got to get to the gym, my brother. We got to cut down. It doesn't matter. It's fine. We're going to look for the debt. We're going to look for the debt. Melissa. On this foreclosure announcement, does anybody see the debt? Is it maybe circled with a giant red arrow? If you see the debt amount on the screen somewhere where you type the number in the comments, what is the debt amount on the foreclosure announcement? Good morning, Sue. Oh, I see the D. Yeah, Sarah wakes up and she goes, where's the D? Give it to me. Sarah, oh my gosh, it's 5:30 in the morning. Oh, I need it. Oh my gosh, my precious. Sarah, $175,000. Too small? Excuse me. So this is going to be the opening bid on the transaction. It's going to be the remaining debt amount. So in this situation, we've got $175,000 of the opening bid. And First Financial Bank is going to bid $175,000. I don't know if I should buy it yet. I see it now. Yeah, you got to look around a little bit, okay? You got to look around a little bit. Come on. 175. But that's not enough information. There's an entire missing step here. Good morning, Danny Boo Miller. Good morning. So if I've got, with me on the chat, if I've got good D, what am I pairing that with? What's the first letter? Let me know in the comments. If I walk around and I've got good D, what am I looking to pair that with? Does anybody know? Good D pairs well with what? You know, it's like cheese and wine. Like V, that's right, Jimmy. Everybody type V in the chat. We're looking for the V. If you've got good D, you want to pair that with some good V. It's almost like God designed it this way. I don't know, it's like a glove, man. It just fits. You know what I'm saying? I'm looking at foreclosures. I have the debt. I also want to have the value. That's right, the value. The value. The value. What is it worth? If this is going to be my bid, I need to know what it's worth so I can figure out my potential profit. Right? Right? All right. So now what information can I take from the foreclosure announcement to then determine the value? I could probably take the address. And when I take the address, I could run comps. I could look at the county appraisal district. I could go, value, Robert, value. Yes, see? Same page, value. So I'm going to take the address, and then I'm just going to go estimate in 2 to 3 minutes of what it's called loan to value. No, good morning. That's a different thing. If I'm going to refinance or get an appraisal, LTV, loan to value, it's a totally different concept. We're talking about foreclosures here. Good morning. So I take the address. And I look it up. Zillow says it's worth $325. Is Zillow the most accurate? No. But in 2 to 3 minutes, I want to ballpark it before I invest 2 to 3 hours of my life on an asset that may or may not make me money. Zillow says it's worth $325. Okay. If it's worth $325, and if the opening bid is $175, what is my potential profit? How big is my PP? Let me know in the comments. How big is my PP? And is my PP big enough for you? Should we continue researching this foreclosure? If you think my PP is big enough for you, in the comments type big. Or like Carrie and say huge. Thank you, Carrie. Finally. Finally. Is that big enough for you? Huge. That's a big old PP. I'm watching. Melissa, that's a, oh. This man is asking questions with my whole, how big is my, sorry, excuse me. That's a big PP. Look, listen, I've been buying assets since I was 20. I've been evaluating assets my entire life, like my entire adult life. I've seen a lot of assets, which means I've seen a lot of PP. And oftentimes people are like, hey, can you look at my PP? I'm like, yeah, just email it to me. So my inbox is full of PPs. I see PPs every day. I'm looking for them. I'm seeking them out. I'm on the internet just searching for it. If you go through my browser history, it's just me looking for PP. This, I've seen a lot. Nobody's seen more than me. Trust me, nobody's seen more than me. That's a decent sized PP. You know what I'm saying? So in this situation, we're going to go evaluate this. Oh, I like it. I'm ready to go to auction. This is a foreclosure. I'm ready to bid. I get my money ready. The question I get at this point in the journey is, can I borrow money for a foreclosure? The answer is yes, of course you can. But you would need to get loan financing ahead of time before you go to foreclosure auction. But if I've got a potential profit of $150,000, I'm going to do that. Oh, I'm going to do it. Good morning. Good morning. If you're new here and you want to hang out with us every day, come up here and tap on the follow button. I go live all the time. So I get my money ready. I'm going to foreclosure auction. I'm ready to let it rip potato chip. I see $150,000 in potential profit. Wait a minute. Jimmy the Fish, good morning, Montana. We need to look for one more thing. Before I put any money down, before I go buy this foreclosure, we need to look for something. Everybody type L in the chat. L in the chat. Sometimes the PP can be so good you get locked in on it. We got to remember to protect our assets. So let's go look for liens. We're going to go look for a lien. Now, if you're not familiar, a lien is a debt. A debt is a lien. So if let's say I've got a house and I hire a contractor to renovate my bathroom and I don't pay the final invoice on that bathroom remodel, they can put a lien. They can take that contract and they can put a debt against my house. They file it with the county clerk. The county clerk issues a lien against my house. When I go to sell my house, the contractor finally gets paid. Then I would get paid whatever's left over. He gets paid first. Therefore, if I'm going to buy a foreclosure, I need to look for liens. Okay? Make sense? Let's go evaluate liens right now. By the way, if you didn't get a chance to register, I've got a free class. I don't do this class very often. It's Saturday, August 8th. If you want to learn how to buy assets that produce profit, just tap on this guy. It's down in the corner. It'll pop up. It'll say class, Saturday, August 8th. The class is free. There's only 200 spots available, but if you want to learn how to buy assets that produce profit, I'm going to evaluate a ton of deals and show you some of the process that we use. And then also I'll show you how we take fake money and buy fake AI-generated assets. Saturday, August 8th, 9 a.m. Central Time, 10 a.m. Eastern. Just tap on this little button down there. So let's go look at liens. Where would I go to find the liens? I would go to the source. So I search who maintains property records in my state. That takes me to the source, which is the county clerk's office. So let's jump over to the county clerk's office. I'm at the county clerk's office. I'm looking at the liens. Here's what I find. Dallas County Clerk. It says, notice of child support lien. Oh! Did you know in the state of Texas, if you don't pay your child support, the Attorney General can put a lien on your house? So when you sell your asset, those babies finally get paid? Oh! 1, 2, 3. 3 child support liens. How many baby mamas are there? Good morning, Chris. Good morning. How many baby mamas are there? If I find 3 child support liens, how many baby mamas are there? How many? Too many. Oh, my friend, stick around to the end. 3. How many baby mamas are there? Let me know. 3 baby mamas? What about baby daddies? Oh, this is a gentleman. I'm the one that evaluated this deal. I blocked out these names. Most of the names look like female names. But nowadays, you know, good point. It's 2026. You never know. Hey, my name's Stephanie. What? My name's Jill. Yo, I don't judge. I don't judge. I'm just saying. Anyway, 3 baby mamas. 3 baby mamas. No, it could be one with 3 children. No. I'm the one that evaluated these deals. These are 3 different women. Trust, as my son says. Trust. $4,900 is owed to that baby mama. $1,100 is owed to that baby mama. 24 big ones owed to that baby mama. Oh! All right. Good thing we looked up liens on this foreclosure. If you're new here, my name is Will. We're evaluating foreclosures live. If you want to hang out with us every day, there's a follow button somewhere up here. All right. So the debt was $175. The value was $325. But now we've got liens of negative $30,000. So let's get inventory of this. I've got a potential profit of $150,000. I found liens. What up, Callie, baby? Good morning, Vince. What's up, Futuristic Glass Doors? Good to see you, baby. Negative $30,000 in liens. What's my new potential profit? Let me know in the chat. What about notice of Liz pending? What does that mean in foreclosures? We'll get to that a little bit later on. What's my new potential profit? $120,000. Okay, all right. The lien chipped away at our profit. Do we still like it? Yes or no? Type Y for yes, type N for no. Do you want to continue researching this deal? Yes or no? $120,000 in potential profit? Yes or no? Liz pending is basically like a notice. This process is beginning. It's the front end of a foreclosure process. I like it. $120,000 in potential profit, ready to rip, potato chip. I dig it. I'm ready to go. So I get my money ready. If you're going to get financing for a foreclosure, you do that ahead of time. We get all our money ready. We're ready to rock and roll. I've got my cashier's checks. I'm ready to walk down to the foreclosure auction, place my bids. But everybody say, but I did notice it says page 1 of 2. That means there's a second page of liens. Should I look at page number 2, type 2 in the chat, or should I be the ostrich in the sand? What do you think I should do? It says page 1 of 2. Oh, gosh. Oh, bother. As Winnie the Pooh would say, oh, bother. I thought this would be a profitable foreclosure to buy, but now I'm not so sure. Ah, crap. All right, we ready? Are you buckled up? Page 2. Deep breath. Oh, you ready? Here we go. Bang. 3 child support liens plus 4 more child support liens. How many child support liens do we have? 3 plus 4 equals how many baby mamas? Let me know in the comments. 3 plus 4 equals how many baby mamas? I think Jenny's a nice girl, but damn. 7! 7 child support liens. Run, Forrest, run! 7 child support liens. I'm the one that evaluated this deal. I'm the one that blocked out names. I can confirm those are 7 different women. Oh my Lanta. $33,000 owed to that baby mama. $30,000 owed to that baby mama. $30,000 owed to that baby mama. $39,000 owed to that. $9,200. $24,000. This guy's got a part-time job going in the wrong direction. So let's take inventory. Hey, we listen. We don't judge. We don't judge. It's none of my business. How many of you are judging? Type J in the chat. We listen. We don't judge. All right. Hold on. Okay, we got to clean this up a little bit. My gosh. All right. So it's not $30,000 in unpaid child support liens. It is not $120,000 in potential profit. In this case, we are judging, okay? Just for the record, we've got $190,000 in unpaid child support liens, which takes our potential profit to a negative $40,000. That's correct. If we buy this foreclosure, we would have more debt than we would profit. Although this young man obviously lacks the ability to pull out, we are going to demonstrate our advice to him through our example, and we are going to pull out. Everybody in the comments say pull out. On this deal, we are going to pull out. Yes, 1, 2, 3, pull out. Jenny, I like you, but I need to pull out. Run! Pull out, never pull out. Yo, Vince, yo, chill. Pull out. Pull out. Oh my gosh. This is why it's important when you evaluate foreclosures to know the first 5 steps within the bonus step. We always look for liens. Always look for liens. Good morning. Really quick, pop quiz, come here. It is Friday morning. Happy Friday to you. It's 8:32 Central Time. I'm in Austin, Texas. You're in my TikTok live typing pull out. So can we lock in? What's going on? Like this, a little early for this, don't you think? I've heard that testosterone's highest in the morning. I don't know if that's true, but can we lock in? So if you get a cup of coffee, grab your Bible, let's come back. Let's not type pull out in somebody else's chat. That's, okay, all right, here we go. What do you mean I'm the one that asked them? That's none of your business. Oh my gosh, good morning. If you're new here, my name is Will. Let's evaluate more deals. If you want to hang out with us every day, just tap on the follow button. If you didn't get a chance to register, I've got a free class. It's August 8th. I don't do this class very often. So if you want to be in the class, just say class in the comments and I'll show you how to register for free. Finances can be so rated. What are you talking about? I'm just evaluating assets. I don't even know what you're talking about. If you want to be in the class, just type class. We're going to learn 3 things Saturday, August 8th. Number 1, how do I find and evaluate assets? Where are they? Number 2, when I find them, how do I know they produce profit? How can I practice buying these assets? Which leads us to number 3. If you want to be there, the class is free, but there's only 200 spots. So if you can't make it, please don't register. It's down here. Tap on this little button somewhere down in the corner. When you tap on that, it'll pop up and it'll say class. Saturday, August 8th, 9 a.m. Central Time, 10 a.m. Eastern. That's 7 a.m. West Coast time. I love you. I'm sorry. If you can be there, feel free to register. If you can't, please don't take a spot for somebody that can. Cool? Number 3, fear, overwhelm, uncertainty. It's the number 1 thing I hear that stops people. What if I'm scared? I'm afraid of risk. I don't want to lose all my money. Cool, I got you. I'm going to show you on Saturday, August 8th, how we take fake money. It's not real. And we buy fake, also not real, AI-generated assets. Everything's the same. Purchase price, net operating income, all the stuff that you need to evaluate, it's in the fake deals. So you can practice buying them over and over and over again with no risk. That's how you gain the skill without using your own money. Then when it comes game time and you're looking at a real deal, you've done it hundreds of times in virtual reality. That makes sense, right? Brilliant. I know. So if you want to be in the class, go register now. We'll talk about all of those things. Y'all want to do? Oh, I had a question on depreciation. Let's talk about depreciation. There was a question on that. This can actually save you a lot of money in taxes. So if you want to be there, come hang out with me. By the way, my name is Wet Willie. I go live all the time. If you want to hang out with us, tap the follow button. I own, believe it or not, I own a CPA tax firm. I'm in all 50 states. We specialize in helping people lower their taxes. So I get tax savings questions all the time. I'm going to talk a little bit about that. Then we'll get back into assets. Cool? This will be an awesome setup to practice with. Yes. How do you get the loan if you're not sure you will even get the asset? Find the asset first. Find the asset first. Find and evaluate assets. You got to gain the skill. When you find the deal, then we can talk about financing. If you find an asset that produces profit, somebody will give you money to buy it, no matter your situation. There's many different ways to get into the deal. Great question, by the way. All right, so let me teach you one of the concepts, and then I'll show you a real-life scenario of zeroing out a tax bill. How many of you want to learn how to do that? Buy assets and zero out tax bills. Type 0 in the chat. Type 0 in the comments. I'll show you how to do it. I'll give you real-life examples from my CPA tax firm, from clients that we've helped do this. I'll show you their numbers. There's no reason for me to make this stuff up. I'll show you. But let me teach you some of the words that we're going to use. That way you're kind of familiar with this stuff. And then, by the way, I do have free tax savings estimation calls. My loyalty is not to you becoming my customer. My loyalty is to screwing the federal government. What I prefer to do is I take the tax law, like the literal book, I turn it sideways, I get Uncle Sam, and I stick it straight. It doesn't matter. It doesn't matter. Really, my loyalty is to help you lower your taxable income, and if I can help you save money on taxes, I'm happy. So if you want to book a free tax call, I don't have unlimited capacity, but they're in my TikTok profile. You can book them. They're free. I think there's like a handful of spots available. I think I have 3. I don't know. I woke up this morning. Can you roll to Cali? Let's roll, dude. I'm in. So if you need tax savings help, I have free tax savings calls. They're free, but there's only like 3 spots available. So if you want to save your spot, here's how you do it. When you're in the TikTok live, just tap on the green face. We signed up last week. You're one of the ones that took the spots. Let's go. Tap on the green face and then tap on the green face again. So one time up here, boop. Nope, not that. Oh gosh. Oh my gosh. Tap on the green. Oh my gosh. Tap on the green face here. Boop. And then it pops up. And then you just tap it again. Bang. Takes you to the main TikTok profile. When you're in the TikTok profile, just tap on my site. When that pops up, it'll say free tax savings call. So that's where you go to save your spot. Let's get to the details and then we'll look at an actual deal. Over there, I lost my screen share so I can see the comments. All right, how long are the calls estimated? I can make it in 1 minute. 60 seconds if you need me to, baby. But I've got some techniques. I can drag it out for 30 minutes. Just depends. What are you talking about? Anyway, never mind. Let's get to depreciation. So if I go out there and I buy assets, If I go out there and I buy assets, what do we do with our money instead of a 401k? Thank you for all of this. Happy to help. Happy to help. Soak it insider. What are we talking about? Good morning. If I go out there and I buy assets, there's something called depreciation. Everybody type D in the chat for depreciation. Depreciation inside of an asset. Let's take a laundromat, for example. Inside of an asset, there are things that I can depreciate off of my taxes. I'm going to explain what these words mean. Inside of a laundromat, there's obviously washers and dryers. Well, the IRS is going to allow you, if you are an employee or a business owner and you buy a laundromat, the IRS says, hey, you can add up certain things inside of that asset and you can subtract it from your taxes. You can depreciate it. So there's going to be washers, there's going to be dryers, and they have a value to them. Well, the IRS is going to allow you to add up what that value is, and you can subtract it from your taxable income. Good morning, Clyde. Good to see you, big fresh cut. Shoot, you know it. Come on, dog. I can add up the value of all of that stuff. So let's say, hypothetically, the value of all the washers and dryers in the laundromat that I buy is $100,000. Well, that would be subtracted from my taxable income. You've got 2 options. Number 1, you can spread that $100,000 deduction out over time. Or number 2, you can accelerate it and take it all in the first year. So, hypothetically, if somebody had $100,000 in taxable income, there's a lot more details to this. But if I had $100,000 in taxable income from my, let's say, job or business, and then I have a deduction of $100,000, what's my taxable income? Let me know in the chat. $100,000 minus $100,000 equals what? What would I be taxed on? 0. I'm going to show you an example, but this is the high-level concept of how you zero out your taxable income, how you pay nothing in taxes. So if this person had a 20% tax rate, 20% times $100,000 income, they would have paid $20,000 in taxes. But now they've lowered their taxable income so low it's 0. So 20% times 0, there's nothing to tax. And this year, in this example, they saved 20 grand. How many of you want to see an actual example, a real-life case study of doing this? Type Y for yes, type in for no. You want to see like a real case study? I'll show you. You tell me, boss. Good morning. Let's come over here. Yes, 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 yes. All right, all right. So let's take a look at this. And then, as I do this, let me know in the comments, are you a business owner? Unless the IRS decides to adjust your tax return and say you made way more. That means, okay, if you made way more and then you didn't report it, that's something different. But the IRS can't just make up numbers and add it to your tax return. It was report, like, okay, think about this. When you have a W-2, your employer reports your income to the IRS. When you get issued a 1099, you fill out a W-9, that gets reported to the IRS. They're not magically gonna make up money that you didn't earn. You probably underreported. Elena, we'll talk about it. All right, let's go here. Let's talk about assets to tax savings. Let me show you how this actually works with a real life case study. Good morning. And then if we get time, we'll evaluate self-storage together. And then we'll talk about tax refunds, tax returns, tax credits, all this stuff. Good morning. If you're new here, my name is Will. I own a CPA tax firm. I'm in all 50 states. We specialize in helping people lower their taxable income, sometimes all the way down to zero. It just depends what you want to do. Business owners, employees, I'm going to show you all a couple of examples of how we do this with our clients. There's no theory here. I didn't read a book last night and tell you about what I read. I tell you what I do in our firm. Cool? Here we go. So this is a laundromat. Let's take inventory of how we evaluate deals. Step number one, if it doesn't produce profit, I'm not buying it. Type P in the chat for profit. And you say, duh, I know, but sometimes people deal with so much pain when it comes to tax man, they'll do whatever to lower their tax bill, even buy assets that lose money. This is kind of the core of buying like the Mercedes G-Wagon and depreciating that asset. That's cool to have a Mercedes G-Wagon or Cadillac Escalade or whatever, it feels good. But if you're not financially free from assets that produce profit, we don't buy depreciating assets. I have an eye on wealth. I understand the pull for material objects, but let's get assets that cash flow. Amen? Cool. So we evaluate this deal that produces profit. Asking price is $350,000. If it doesn't produce profit, I do not buy it, even if it saves me on taxes. The revenue is $180,000. In case you're new, revenue is directly from the customers. That's before my business expenses. So I get revenue directly from my customers, my washers and dryers. I subtract all my expenses, electricity, water, rent, so on and so forth. My profit on this asset is $63,000 a year. Asking price $350,000, profit $63,000. Cool. There's also something called FFE. Everybody in the chat, type FFE. I want you to remember and retain this information. Just type FFE in the chat. FFE. It stands for, it's an accounting term, and it's a tax deduction. It stands for furniture, fixture, and equipment. Furniture, fixture, and equipment. So when you buy certain business types, you can add up all the furniture, fixture, and equipment inside of that business. In a laundromat, the furniture, fixture, and equipment is the washer and dryers. Washer and dryers brand new in a laundromat can be between $7,000 and $17,000 or more. The ones on cruise ships get really expensive. But these can be between $7,000 and $17,000 brand new. The IRS says because you are now an owner, how many of you are business owners? Type B. How many of you are employees? Type E. If you're both, say both. If you're a business owner, type B. If you're an employee, type E. If you're both, type both. David Dixon Design, good morning, Mr. Business Owner. Both, Carrie, employee, business owner, Big B, both, Elena, employee. Whether you're a business owner or an employee, you've now stepped into ownership. Tax law is written for owners. Those that own get deductions. Because you own this asset. Now, if you're a laundromat owner, you can add up all the economic value of this. And you can do one of two things. This is called depreciation. Let's understand depreciation. Depreciation. If I go to the store today and I buy a brand new TV and I watch it today and I'm like, I don't like it. And then I have a garage sale tomorrow. Can I sell the TV for the same price or less? If you think it's the same, type S. If you think it's for less, type L. I bought a TV today. Tomorrow I have a garage sale and I sell it. Can I sell the TV for the same price I paid for it, or would it be less? Less. That's depreciation. It's worth less. Worth more because I touched it. Come on now. It would be less. It went down in value. It's an open box, discount, all that stuff. That's depreciation. You drive a new car off the new car lot because you just bought it. It's used, worth less. That's depreciation. Well, the IRS recognizes that washers and dryers wear out, rust out, and break down over time. So eventually, these things are going to be worth nothing. That means there is a sliding scale from their peak value to the zero value. And over time, you can subtract that from your taxes if you own the asset. That's called depreciation. Got it. You've got two options. Option number one, you can add up all the value of this depreciation and you can take a little bit every year off of your taxes for quite some time. Option two. Option two is I can add up all the depreciation on this asset and I can accelerate it and take it all at once in the year that I bought the asset and placed it in service. How many of you have a big tax bill on the way to you? Just say me in the comments. I don't need to know your business. Just say me. You've been making some good money this year, 2026. You got a big tax bill coming? Just say me. Me? Watch this. If we buy this asset and place it in service before the end of the year, 2026, which is December 31st, and we are running out of daylight, by the way. August 1st is mañana. That gives us 4 months to get this deal done. We buy this asset, we accelerate all that $231,000 in depreciation. What does this mean? I don't ever follow people. Good stuff. Keep it coming. Let's go. I appreciate you. What would this look like? $231,000 depreciation. If I buy an asset and place it in service and I fully accelerate the depreciation, here's what it would look like. Check this out. Let's say your income, hypothetically, is $231,000 from your W-2 job or your business. And then let's say you buy an asset and you depreciate that asset all in the first year. 231 minus 231, what is my taxable income? Let me know in the comments. Oh! What? What's 231 minus 231? Let me know in the comments. How much would I be taxed on? Nothing. There's nothing left to tax. Doesn't matter what tax rate you're at. Your taxable income is literally zero. That is how you zero out your taxes. I'm going to show, if you want me to, I'll show you a really big example from one of my clients. I think it was like $2.8 million in tax bill gone. I'll show you that next. But I want you to understand that any income level can do this. We did a couple of different things in this example. We took money that we were earning, we used that to buy an asset that produces profit. In this example, that's $63,000 a year in profit. And we accelerated the deduction, so in the year they bought it and placed it in service, they zeroed out their taxable income. If they were at a 20% tax bill, they would have paid $46,000 in taxes. They don't pay that anymore. One move swung the entire thing. Guys, I'm an underwriter, Ron. Let's go. Money Man is 100%. Let's go, underwriter Ron. I appreciate you. So we bought an asset that pays income, that doesn't require the owner to be there. That buys your time back. That allows you to retire without waiting until you're 65 or 75 years old. Furthermore, in the year that we bought the asset and placed it in service, we saved $46,000 in taxes. Oh, that's what I'm talking about. Then the question becomes, how many assets do I need? That's what it's about. Cool? I'm going to show you some more examples. If you didn't get a chance and you want to talk to myself or my CPA tax team, my name is Will. I own a CPA tax firm. I'm in all 50 states. If you need help, you want to implement stuff like this, this is what we specialize in. If you want to book a free tax savings call, I don't have unlimited capacity, but here's how you can save your spot. I'm going to do another deal on this. I think it's going to be $2.8 million tax bill gone. What if I made less than the depreciation amount? I'll show you. Great question, Mick Nutter Butter. If you want to save your spot for a free tax savings call, I only had 3 spots when I opened this. So if there's no availability, I love you. Here's how you would do it. Go up here, tap on the green face, boop. When the green face pops up, tap on the green face again. Green face, boop. It looks like that. That takes you to my main TikTok profile. When you're in the TikTok profile, just tap on my site. Boop. Oh gosh. Oh gosh. Oh my gosh. Boop. Right there. And then it just says free tax savings call. Cool? All right, that's the last time I'm going to tell you about it. I don't have unlimited capacity, but if you want to sit down and estimate tax savings for free, that's how you do it. I set aside a little bit of time every now and then so that you can do it. Awesome. What if I made less than the depreciation amount? Great question. All right, so let's take this for example. Let's say, and then I'll get to $2.8 million tax bill of how we do this. Thanks for your knowledge. Happy to help, Julio. Let's say hypothetically your income was $150,000. And then let's say you had deductions of $200,000. This is what's called a carry forward. So you would zero out your taxable income this year, but for 2027, you would have $50,000 remaining. Does this make sense? Type Y for yes, type N for no. Income, 150. Deductions, 200. Carry forward, 2027, you get that 50,000 that rolls over. Yeah? Let me show you a different example of this happening. And this is one of the misconceptions about the people that are like anti-billionaires or anti-companies taking tax deductions. Let me show you. Let's go Uber loss over time. Let's see if this works. Let's go to our images. Okay, let's go here. All right, can I zoom? Where did it go? All right, can y'all see this? Yeah. Okay, so check this out. Uber, you've ever taken an Uber? You get in an Uber and it drives you to the place? They've been losing money ever since they've started. Like Uber is a great company. If you just want to lose some money fast, that's a great company to invest in. Since they started in 2014, they've been losing money. From 0 billion to 5 billion in losses, 10 billion in losses, $15 billion in losses. This is time. 2014, 15, 16, 17, 18, 19, 20, 21, 22, 23. In 2023, Q3, quarter three, they finally made a profit. But they have $30 billion in cumulative, it's added up, cumulative losses. So since 2014, when Uber started, to 2023, almost 10 years, they've got $30 billion in losses. Well, that creates carry forward, exactly. So now they've got $30 billion in carry forward. So when Uber finally turns a profit and they make a profit of $326 million, are they going to pay any taxes? Yes or no? Type Y for yes, type N for no. The IRS has calculated $30 billion in losses. After over a decade of in business, they finally make $326 million. So when they file their taxes and they say we made $326 million, the IRS is going to take $326 million off that $30 billion stack and say you don't owe any taxes. And that's going to happen for a long time because $30 billion is a big number. So they're going to continue to make profit, hopefully, over time. And then 5 years from now, people are going to be pissed and go, how does Uber as a big corporation make all this money and not pay any taxes? Well, are you willing to lose $30 billion chasing your dream? If you are, the government has tax laws that will benefit you. Make sense? Amazon doesn't pay any taxes. Look at Amazon's loss when they first started in 1997, right? If you're willing to take this kind of risk, the IRS says, cool, we'll hook you up with some tax returns, tax incentives. Make sense? Cool? All right, so that's carry forward from a personal perspective, but also from a business perspective, just so you can see how it works. Great question, by the way. Great question. All right, let's go to another example. Okay, what do you want to do? Do you want to do opportunity zone investing? So if you've got a capital gain like a stock, crypto, business, real estate, how you can chip away at that tax bill, but then you can invest in real estate and not pay any taxes on that. If you want to talk about opportunity zone investing, type OZ. Or would you rather me show you how we got a $2.8 million tax bill to go down to zero? Type 228 if you want to do that. 2.8, 28. What do you want to do? Opportunity zone investing, making capital gains taxes, chip away, or completely go away, or talk about 28. What do you want to do? How many of you want to do both? 2.8, 2. You want to do both? Tracy, opportunity zone. Jade, opportunity zone. You want to do all of it? Option 1. Okay. $2.8 million tax bill going away. Yes, both. Okay, I'll cover both. I'll do opportunity zone first, then I will make the $2.8 million tax bill go away with one of the assets that we purchased. If you didn't get a chance, if you get a tax bill coming and your CPA is asleep at the wheels, he's Ray Charles to it. He's not helping you find tax savings. I've got free tax savings estimates. If you want to sit down, estimate tax savings, I've got calls that we can do, happy to help. If there's a way that I can lower your taxes, I will show you. How you do that really quick, come up here and tap on the green face, boop. When that pops up, just tap on the green face again, boop. Then you're in the main TikTok profile. When you're in the TikTok profile, just tap on my site. When the site pops up, it'll say free tax savings call. Cool? If there's any availability, just go fill out the information, tell me what's going on. If you're a business owner, awesome. If you're an employee, awesome. Do you want to buy assets? Cool. What's going on? We'll sit down and estimate tax savings. Either myself or my CPA team. I've got a CPA firm. We're in all 50 states. All right, let's get to Opportunity Zone. Then I will walk you through the $2.8 million tax bill. Adios and vamonos. And good morning. We're over here now. Yep, good to see you. Okay, let's clean off this guy. Opportunity zone investing. If you have a capital gain event, that means you've got some stocks that went up in value. Say me in the comments. Or let me know, what is your thing? Do you have stocks? Maybe you bought stocks small, they went big? Just type stocks. Do you have real estate? And that real estate, investment real estate has gone up. Just type R for real estate. Crypto, type C. Do you have a business? That business has accumulated a lot of appreciation. Type B. Do you have some type of event? Let me know in the comments. What's going on? Good morning, Dana. Good morning, Sunshine. It's good to see you. Good morning. What do you have a capital gain event? I'm going to show you how we can make that adios vamonos. I'm going to walk you through this, then we'll get to the $2.8 million tax bill going to zero. And I'll show you step by step how we do it all. I'll even give you stuff that you can research and look up yourself. Stock specials, capital gains. Good morning, Gotham. Good morning. How did I know we'd get an appearance? Good to see you, brother. Good morning. Okay, come here. So we're going to walk through a couple of different things. Then I'll show you how to find this stuff, how to search it. Thinking about cashing out my stocks. Okay, before you do that, we need to chat, but let me show you. So this is all going to start with a capital gain. Some type of capital gain event has to happen in order to do what we're going to talk about next. Capital gain event could be a variety of different things. So Dana's thinking about stocks. It could be real estate. Dana owns real estate. It could be a business that you own. If you have a business that you own, you built it, you want to exit that business, cool. Let's talk about it before we do it. It could be crypto, it could be a variety of different things, but I want you to understand the core is that a capital gain event has to happen first. Before you have this event, make sure that somebody like me talks with you so we can strategize tax savings. If you give me time before, I can help you save a lot of taxes. If you do this, that really makes it difficult to do anything with tax law. But then let's say we take that capital gain and we go invest in something inside of an opportunity zone. In just a minute, I'll show you a map of how you can search this stuff. So opportunity zone. Opportunity zone is a law that is passed by Congress, and you're buying real estate in these opportunity zones. It's areas on a map that you can purchase. So you sell the stock, you sell the real estate, you sell the business, you sell the crypto, then you invest that money inside of a property. In this example, let's call it a commercial real estate building, and let's say the price is $1 million. So if I sold a capital gain, and I've got $1 million in capital gain, I would at least pay 20% in capital gains tax. 20% in capital gains tax means that's a $200,000 tax bill. Everybody in the chat say, ugh, ouch. Say ouch in the comments. Oh, $200,000. I've cut some big checks before. It never feels good. Yeah, but you made a lot of money. Yeah, it still hurts. $200,000. Number one, if you take your capital gain event and you invest in it, Opportunity Zone 2.0, which Trump's One Big Beautiful Bill Act made permanent after July 6th, 2026. Number one is this is deferred for 5. Everybody type 5 in the comments. So the $200,000 tax bill is still due, but you have 5 years to turn it in. You don't have to do it right now. So it's 5 years. What does this mean? This means you get to keep that $200,000 in cash, and you have opportunity. So the time value of money states money in my pocket now is better than money in my pocket later. And I've got 5 years until that tax bill is due. So I can hang on to my 200 grand and maybe I can do something with it to grow it. If I grow it from 200 to 250, I just chipped away at my tax bill. Huh. Point number 2, Opportunity Zone 2.0, which is now effective and permanent, means that the IRS is going to give you what's called a 10% step up in basis. What does all those words mean, man? This is $1 million capital gain for our example. 10% step up in basis means the IRS is not going to tax you on $1 million. They're only going to tax you on $900,000 because you took the capital gain and invested in an opportunity zone. One of the benefits of opportunity zone investing is they're only going to tax you on $900,000, not the $1 million. 20% capital gains tax on $900,000 means your tax bill is only $180,000. Out of the gate, you just saved $20,000. You're welcome. 20 grand. Let's take inventory of how much money we're going to save through this journey. Will somebody in the comments type 20K? So far, you had $1 million capital gain, and I just showed you how to save $20,000 in taxes. This one's free. Good morning. 20K. Oh! Oh! So then you take your $1 million, you buy this opportunity zone, commercial real estate inside of an opportunity zone, and then let's say that this goes up in value over time. Hypothetically, Let's say your $1 million property goes up to, I don't know, $5 million. So that's a $4 million capital gain on the real estate that you purchased in an opportunity zone. I'm going to show you a map of how you find this in a second. So $4 million gain, I bought it for $1 million, it went up to $5 million. Because I invested inside of an opportunity zone, if I hold it for 10 years or longer, that entire $4 million gain is tax-free. What? If you buy assets inside of an opportunity zone and you do it correctly, if I hold it for 10 years or longer, when I sell that property inside of the opportunity zone, the entire capital gain on the property is tax-free. 20% of $400,000, $4 million, means I would have paid $800,000 in taxes. But you hang out with somebody like me and you purchased in an opportunity zone, held it for 10 years, you no longer owe $800,000 in taxes. Oh! Continuing. Because you bought a commercial property inside of an opportunity zone, you're getting monthly recurring income. That's good news. And if this thing appreciates in value over time, let's say year 4 or 5, when that 5-year deferral comes due on the original capital gain that you sold, stock, real estate, crypto, whatever you're into, you sold it, $1 million, they're going to tax you on $900,000, you owe them $180,000. Let's say you bought a $1 million property, it appreciated in value. 5 years from now, when that tax bill, $180,000, is due on the original investment, you do a cash out refinance. Are you taxed on cash out refinances? Yes or no? Type Y for yes, type N for no. When you borrow against your assets, when you take on debt, does the IRS tax your debt? Y for yes, N for no. Good morning. Does the IRS tax your debt? Yes or no? No. There's no taxation on that. So now you're going to borrow against the value of your asset. So they give you a loan. Let's say, hypothetically, they issue a loan for $180,000 in gain. They direct deposit that into your bank. You don't pay tax on it. You take that $180,000 loan and you pay your tax bill. How did you pay your tax bill? You hung on to your cash, didn't pay it, 5-year deferral. You buy an asset in an opportunity zone, it goes up in value. You refinance against the asset 5 years later. They give you a direct deposit of cash. You don't pay. Oh, what? This is what I do for a living. The real deal, Drew. Good morning, Drew. Opportunity zone investing can be powerful. There's a lot of stipulations with it. I'm going to show you how we did it for one of our clients in just a minute. But let me show you a map of how you find these things. Come over here. By the way, if you're new here, my name is Will. I own a CPA tax firm. We're in all 50 states. If you need help, I've got a ton of free resources that I can send to you. If you need help, just say me in the chat and I'll show you how to get some of those free resources. My loyalty is not to you becoming a customer in my CPA tax firm. My loyalty is to screwing Uncle Sam, if I'm going to be honest with you. Can I? Is that okay? Can I say that? Can I say that? Good morning. Good morning. All right, here we go. Housing, urban development, HUD, OZ, me. Okay, couple of things. I've got free tax savings estimation calls. They may be gone. Because they're free, they sell out. I set aside time every now and then, myself and my CPA team, to estimate tax savings for somebody. We do a lot of free service like that. I don't know if there's any more availability, but to get it, just tap on the green face. The green face, I think, is up here. Tap on the green face. When you tap on the green face like that, boop. When you tap on the green face, it pops up again. Tap the green face again, boop. Then you're going to my TikTok profile, and on my site, it'll say free tax savings calls. If there's any availability, it'll allow you to fill out the information, name, what kind of business you're in, what kind of industry you're in. That helps me estimate tax savings for you. In just a minute, oh, by the way, when you do that, I'll send you my free tax savings audiobook. That way you know how to think and learn about tax savings that's available to you. So if you sign up for a free tax call, I'll send you the audiobook for free. I'll have your email, automatically send it to you. But here's what we do. If you want to find this information, search HUD OZ map. Take notes, grab screenshots, whatever you got to do. HUD is the Housing and Urban Development of the United States government. HUD OZ map. This is the official Opportunity Zone map of the United States, which was passed by Congress. And then you're going to go to this site, HUD.gov, Opportunity Zones. Boop. This is going to take us here. In the comments below, if you want to look at opportunity zones in your area, comment what state you're in. What state are you in? Good morning. My name is Will. I'm in Texas. Nice to meet you. Where are you tuning in from? Let me know your state. We'll go look at opportunity zones. Texas. Come on, Carrie. Come on, Carrie. But I'll tell you what now. Let's go to the border. Look at the border in Texas. Opportunity zone. Let's go up to Austin, Texas, where I frolic. Look at this. Opportunity zones. Let's go over to Louisiana. This is my next door neighbor. Let's go down to Baton Rouge. Come on, Louisiana. Look at all these opportunity zones. Let's jump over to Massachusetts. I see you, Massachusetts. Let's go over to Boston. Hey, we could buy opportunity zones over here. Fort Worth. I see you, Fort Worth. Let's go to Kansas. I saw somebody in Kansas. Man, where is Kansas? There's Nebraska. Is Kansas above Nebraska or below Nebraska? Sounds like below. There's Lincoln. Manhattan, Kansas. Kansas State checking in. Opportunity zones. Florida. Let's go down to, you in South Florida? Look at this. I think this is alligator country. I don't know what's going on over there. Going back to Cali, baby. Let's go over to California. Southern California, opportunity zones. Opportunity zones around East Los Angeles. Ooh, that sounds rough. That sounds rough. Not the good kind either. Ugh. Texas, Arizona. Opportunity zones are in all 50 states. Lot of opportunity there. Before you get into opportunity zone investing, make sure that you have a conversation with a tax professional. You've got to have some pre-planning. A lot of tax savings is in the pre-planning. Before you sell the capital gain, before you have that event, make sure you talk to somebody. We specialize in a lot of that stuff. Georgia, good morning. Let's jump over to Georgia. Let's go over up to Atlanta. Atlanta, Georgia, lots of opportunity zone. Zambia, this is United States, so can't help you on that one. Good luck, Zambia. Florida, what is this? Let's go down to Florida. Tampa area, look at Tampa. St. Petersburg is one of my favorite places. It's beautiful there. Beautiful. Zambia? Yep, no opportunity zones from the United States in Zambia. Sorry. Good luck. Good morning. All right, I promised you we're going to make a $2.8 million tax bill go away. Are you ready? So was that helpful? Was that helpful, yes or no? Looking at opportunity zones, there's a lot of moving pieces on that. But did we get like something out of that? Yes or no? Type Y for yes, type N for no. Canada, good eye, mate. Good eye. I'll put another shrimp on the barbie. Oh, that's Australia. What is A? 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 Mississippi. Good morning, Mississippi. But I told you what now. Cool. Let's do $2.8 million tax bill gone away. You ready? All right. By the way, if you didn't get a chance to book a tax call, you want my free tax savings audiobook, all that stuff, we're going to wind this thing down in a minute. To save your spot, come up here and tap on the green face. The green face will pop up again. It'll be down here. Tap on it again. That takes you to my main TikTok profile. Tap on my site. That's how you can book a free tax savings estimation call. We'll sit down and estimate ways you can lower your taxes. I'll also send you my free tax savings audiobook. Cool? All right, here we go, sweet face. Let's go to, you ready? So we play a game called How Low Can I Go? How low can I go? And the answer is 0. So let's get to a $0 tax bill. I do an entire training on this. Essentially, you're going to run out of time. You've got between now and December 31st, which is not much time. Tomorrow's August 1st. So if you, like for example, how many of you want to buy assets? Type A in the chat for asset. You want to buy real estate, laundromat, car wash, self-storage unit, foreclosures. You want to buy something. Just type A in the chat for asset. If you're going to be materialistic about something, let it be assets. Man, that guy just won't stop buying real estate. Next thing they say is, man, that guy's so rich. Assets. Okay. I'm going to teach you how to do a lot of that on Saturday, August 8th. So if you didn't get a chance to register for the class and you want to learn how to buy assets, go down here and register. I'm going to take you behind the scenes of my passive income club, my private group of how we buy assets that cash flow. If you want to do that, go register for free. There's a little button that looks like this. It's down here. Tap on it. It pops up. It says Saturday, August 8th, 9 a.m. Central Time, 10 a.m. Eastern. You can register. But when you start buying assets from a tax perspective, you have until December 31st to buy it, place it in service, accelerate depreciation, and take it on your taxes. August, September, October, November, December. We do not have much time to do this. You have to find an asset. You have to evaluate the asset. You have to purchase the asset. You have to close on the asset. You have to place it in service. That is not a lot of time. We can do it, but we got to move and groove. When you do this, you can generate big tax savings. Come here. Let's do, I'm going to kind of butter us up. I'm going to get us warmed up. We're going to do some financial foreplay. If you've never experienced financial foreplay, now's your day. Excuse me. Oh my gosh. We're going to learn and understand a lot of the lingo. We're going to practice on self-storage. Once we feel all warmed and buttered up, then we're going to go a little bit deeper. Is it okay if I go deeper? Can you show us a 1031 exchange? Irene, I got you. Only because you said please. I will in just a minute. So I want to go out there and I want to buy this self-storage facility. This is one of our clients that went out here and did this. This is a 3-unit complex. Everybody type 3 in the chat. 3-unit complex. Self-storage facility. It's got 3 different buildings on it. When you buy an asset, you can't subtract the dirt from your taxes, but you can subtract the improvements. The improvement tree, the improvements is the building. The improvements is the asphalt. It's the roll-up doors. It's the light fixtures. It's the hinges. It's the electrical wiring. That's an improvement, but I can't subtract the dirt. So what he did, one of our clients did, went out there and bought a 3-unit self-storage facility. Our job as accountants and CPAs is to go in there and evaluate all of the stuff that we can subtract from his taxes. And then he can decide if he wants to accelerate it and take all of those tax savings in year 1, or if he wants to spread it out over time. Well, of course, he decided to do it in year 1 because he's got a big tax bill coming. He's like, man, this year was really good to me. I made some good income, and that tax man wants to take some of that good income. So what can I do? Well, buying assets allows you to do some of this. We accelerate it. This is what it looks like. So what you're seeing right here is the backside of a cost segregation. A cost segregation is when you hire an engineering firm and a CPA firm like us to come out there and add up all the economic value of the things that you can deduct from your taxes when you buy an asset, like a self-storage, like a rental property, like an Airbnb. So everything in the 7-year class life cycle, you're allowed to accelerate to the first year. And you can take this as a deduction. This includes self-storage partitions and roll-up doors, security cameras, electrical service components, so on and so forth. The total economic value of the 7-year class life cycle is $166,000 at a 61% depreciable basis. 15-year class life cycle or less, asphalt paving, fencing, security, storm drainage, blah, 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 $106,000, 38% basis. When it's all said and done, what this guy can fully accelerate in the first year is $238,000 off of his taxes. $238,000 is his deduction. So this is what it looks like. Let's say on his tax return, he's got $238,000 in income. He takes a $238,000 deduction. His taxable income is, everybody in the chat say 0. Oh! Taxable income is 0. Everybody say 0. 0. Saved by grace. 0. Nothing left to tax. Oh! If he was at a 20% tax rate, that's about a $47,000 tax bill. There's nothing left to tax at the end of the year. He saves $47,000 in the year that he bought and placed in service the asset. Depending on your income and your tax rate, sometimes your tax savings is greater than your down payment to buy the asset. Think about this. If I get an SBA loan to buy certain businesses and they only require 10% down, like an SBA 7A loan, and they only require 10% down, if I deduct fully accelerate a big enough number and my tax rate is, say, 33%, I would save more in taxes than my down payment. The IRS covered my down payment for me. Does this make sense? So all this has to be done before January. January 1st, 2027 starts a new tax year. If you want to lower your 2026 tax bill, yes, it needs to be done before the end of 2026. Buy the asset, find the asset, evaluate the asset, buy it, get it under contract, place it in service. Absolutely, we've got to do, as long as you place it in service before the end of the year, we're good to go. Great question. If you need help doing these things, that's why I have the free tax savings calls. I don't know if I have any more availability, but here's how you do it. There's a green face at the top. Tap on the green face. Boop. The green face pops up one more time. Tap it again. When you tap on the green face here, boop, it takes you to my TikTok profile. When you're in the TikTok profile, just tap on my site. It's at the top. When that pops up, it'll say free tax savings call. I offer those calls for free while they're available. I don't have unlimited capacity. Myself and my team, we do those calls. It's like our public service. And I also send you a free tax savings audiobook too. All right, here we go. $2.8 million tax bill going away. Are you ready? You want to see it go bye-bye? Let's get to the big boy. This is the one we've been waiting for. Hold on, I think the tax bill was bigger. Okay, come here. Let's do some math really quick. Let me get my cellular. All right, come over here. Let's do this. 13. Okay. $13.8 million is the income. Let's just multiply that by like 30%. That's a $4.1 million tax bill. If we did $13.8 million at, say, like 25% tax rate, that's $3.4 million in tax bill. Everybody in the chat say ouch if you understand. Say, ah. Can you make that sound? Type ouch in the comments. If this guy doesn't do anything, that's $3.4 million in taxes. Not good. Painful. The federal government doesn't even send you a thank you card. Brandon, isn't that crazy? Isn't it crazy? All right, so this guy, he lives in Florida. He called me. He's like, hey man, I really appreciate you and like all the stuff, but I got a situation going on. And this was like, I don't know, like June, maybe March, something like that. I don't recall. It was a couple years ago. He's like, hey man, I've got a big tax bill. I've had a really good year, got a lot of contracts on the board, crushing it, got a lot of good income. And he's like, I think I'm going to have a big tax bill. How much you think? And he's like, 2 or 3 million. I go, ugh. I go, dog. I go, why are you calling me? He goes, can you help me? I was like, maybe. I go, what do you want to do? He goes, I'll do anything. I go, you'll do anything? He's like, well, almost anything. I was like, all right, okay, cool. Anything legal. All right, cool. So I was like, are you interested in buying assets? Because if you buy assets, we can like really lean it heavy and get you some major tax incentive. Save me from 3.2 million, Gotham. I got you. With all those baby mamas, we got different problems for you. So we start looking at assets. So he finds this mobile home park in Florida, and it's got 6 one-story buildings. Everybody type 6 in the chat. 6 one-story buildings. Type 6 in the comments. And remember, you can't deduct dirt. You can deduct improvements, though. You can subtract improvements. 6 in the chat. So all of these buildings, it's got concrete paving, asphalt areas, landscaping. It's got basketball courts, volleyball courts, clubhouse, gym. It's got all this stuff that's on there. Do you have to keep purchasing assets forever to keep getting tax deductions? No. If you buy assets, Shelly, like for example, if you buy a rental property and you don't accelerate it, the rental property depreciation schedule is 27.5 years. If you buy commercial real estate, it's 39 years. So you would take a little bit of that deduction for 27.5 years. You don't, but this is accelerating. Same deduction, you can choose to accelerate it and take it all in the first year or drag it out over time. Great question. Charleston was so pretty. Anyway, so he buys the mobile home park. He accelerates the depreciation. This is what the cost seg look like. We add up what his tax savings can be. Dedicated income and electrical services, 400 amp breaker, equipment panel, security systems, gym equipment, decorative lighting, $2.3 million. Value 8% basis. Sassy, sassy. Dude, I'm just jealous of the Black Keys. That's all. That's all it is. Add up storm drainage systems, rec facilities, site improvements, site structures. $20 million, 73% basis. Mobile home park has different tax structures. Structural components, building systems, $5.2 million. This is the export of the cost segregation study from the engineering and CPA team. Cool? Salty? Salty, good morning. 18.6%. In conclusion, instead of paying $3.4 million-ish to $2.8 million-ish in taxes, this guy generated a year one deduction of $13.8 million. What? He bought the mobile home park, fully accelerated the depreciation in the first year, and created a $13.8 million year one deduction. That means he doesn't have it again. But this is the most money this guy's ever made in his career, so he might as well accelerate it now because he doesn't know what's going to happen next year. What did that do for him? Come here. Let's take this. So let's take income. You ready? $13.8 million. Yeah, but wouldn't he have to take the cost of the mobile home park from the $13.8 million? McNutterbutter, will you ask me it differently? I don't understand your question. Wouldn't he have to take the cost of the mobile home park from that $13.8 million? I think the answer is no, but I'm not, I think no. I don't know what you're asking me though. Those are, what he pays for a down payment to buy the asset is completely different than the deduction. Does that make, I think I know what you're asking, but I'm not quite sure. His income, 13.8 milli. Deduction, 13.8 milli. Instead of having a $3.4 million tax bill, in the chat, let me know, what is his taxable income? Excuse me. Does that float to the following year if unused? Yes, Gotham, it will roll over. 13.8 million minus 13.8 million equals what? What's his taxable income in the year that he bought the asset and placed it in service? Oh, Wet Willie's not salty? Wet Willie's not salty. I'm not. Where was my invite is all I'm saying. Junior, Allen, 0. Kelly Brown, 0 million. Sweetface, $0 million. Nothing left to tax. To Gotham's point, what if this guy's income was $12.8 million? And what if he had a deduction of $13.8 million? Well, in 2026, when he files his taxes, there's 0 in taxable income. And then for 2027, this guy has a $1 million deduction waiting for him. That's called carry forward. Excuse me. He would carry that forward to the next year. What? Awesome. Cool? All right. We're going to move on to another piece. So next year, let's say the guy makes another $12.8 million. He would deduct $1 million out of the gate. So now he's only taxed from day one, January 1st, 2027. If you didn't get a chance to book a tax savings call, you probably snoozed and loosed. If there is a chance for availability, you can save a spot. If you want to sit down and estimate tax savings together, I have free tax savings calls. This is a part of our public service. I don't know if I have any more availability. Every time I offer it, it books up. But if there is availability, here's how you get it. When you're in the TikTok live, just tap on the green face. Boop. Tap on the green face. When it pops up, it'll pop up down here. Tap on that guy. Boop. Then it takes you to my main TikTok profile. When you're in the TikTok profile, just tap on my site, which is at the top. When you tap on the site, it'll pop up and say free tax savings call. If there's availability, go save your spot. Go tell me what you have going on. So green face is up here. And then green face pops up when you tap it here. Just tap the green face to get to my profile, then tap on the site. Tell me what's going on, what your situation is. If you're a business owner, what industry are you in? Those are going to be things that help me do what's called benchmarking. Benchmarking is knowing your industry and then finding tax strategies, deductions, things for you that other business owners are using. I have a CPA tax firm. I'm in all 50 states. I got a lot of experience, so maybe we have a situation that you're in that we've helped somebody else do, and I can tell you about how I would handle your situation. Cool? All that's free, and then I will also send you my free tax savings audiobook. But let's do one more philosophy. Let's talk about this. Come here. Good morning. Good morning. Gotham, what are you up to, man? We got a special this year? We got a special this month? August, we're going into August. There has to be a new special. Good morning. Good morning. Oh my gosh. All right, let's talk high-level philosophy. What is the reason that we buy assets that cash flow? Why are we so focused on this? Why is it so important? Yes, 250. It's the year. Okay, it makes sense. Because it's the 250th anniversary, we should do a 250 for one. I don't think I'm going to have time today, but how about, should we do a Saturday special? Should we do it tomorrow? I don't know, man. Maybe Monday. I'm down. Saturday, Sunday. All right. So how do we get financially free without waiting until we're 103? That's the entire philosophy. What do I need to do? Why is this not working? All right, good enough. Good enough. All right, come here. How do I get retired without waiting until I'm old? Here's our philosophy, the core of this. What we do is we focus on buying assets. An asset is something that produces profit that doesn't require us to be there. So if I buy an asset, it needs to produce passive income. By definition. Thank you, Dean. Will, for being so entertaining and educational while still keeping it real and professional. Let's go, Dean. Oh my gosh, thank you for those nice words. I'm happy. What's up, Sub 2? Come on, Dean, I appreciate you. So we buy assets, those assets produce profit. In the comments, please let me know, what are some assets that we can buy? What are examples of assets that produce income that don't require us to be there? Give me some ideas. What do you think? I'll kick us off. Maybe I can buy real estate? What are other asset examples? I could buy ice machine. I can buy ice vending. Any other asset types? Commercial real estate. Okay, car wash. Commercial real estate. Storage. Growth on a security is also profit, though. Growth is not income. A growth stock and a dividend stock are two different things. How you get financially free is producing income. I missed it. Okay, so I'm not saying don't buy growth stocks, but it just doesn't produce you income. You'd have to sell your growth stocks and turn it into income. If you did that, how would you turn it into income? Microsoft went up 16% yesterday. That's good. We want our assets to go up in value, but appreciation is a different income stream than actual cash flow, actual income. Best stay hydrated. Okay, so these are a variety of different assets that produce income that don't require us to be there. How do I get financially free? Passive income, when greater than expenses, you're financially free. If I buy assets, those assets produce income that don't require me to be there. I've disconnected time from money. Therefore, I can stop working one day. Keep it up, Microsoft. Let's go. Passive income, when greater than or equal to expenses, you're financially free. If my personal living expenses are $5,000 a month, and I have an asset that gives me $1,000 a month in profit, in the comments down below, please let me know how many assets do I need until I'm financially free. My asset is out cruising around right now. Oh my gosh. Dude, Shelly, are you watching the tracker? So Shelly's got, she's got a car that she rents out on Turo, and it's out making money right now. How awesome is that? So Shelly's at work doing her job thing, put the little earpiece in, over, and she's watching her car on GPS go out there and make money for her. What? 5 assets. That's all it takes. That's the name of the game. In this example, assets that produce passive income when greater than or equal to expenses, you're 5 assets away from freedom. Cool? All right. So if you didn't get a chance to register, I would go register now. I've got a free class Saturday, August 8th at 9 a.m. Central Time, 10 a.m. Eastern. If you want to learn how to play this game, I would go register for free. If you want to be in the class, just save me. I'll show you how to register right now. Drop shipping, man, that is a fast way to lose money. The fastest way to lose money is gambling. The second fastest way is day trading. Drop shipping, Amazon FBA, I'd put it up there too. Where? How do I register? Okay, if you want to register, just tap on this guy. Somewhere down here. There's a little button. Tap on this guy. It'll pop up. When it pops up, it'll say class. Saturday, August 8th, go register there. And then on the next page, you can add the Zoom information. It's hosted on Zoom. Why? So I can show my screen and show you deals behind the scenes. So you can add the Zoom information directly to your calendar. So just go tap on this guy. It'll pop up. It looks like this. And then we get a dip. So last chance. If you're going to register, do it now. Tap on this guy down here. Boop. I'm registered. Let's go, Dean. And then it says class, how to get assets, August 8th. A little bonus of what I'm going to teach you there is 3 things. Number 1, how do I find assets? Where are they? Number 2, when I find it, how do I evaluate it? How do I know it's going to produce profit? And then number 3, the number 1 thing that stops people is fear, overwhelm, uncertainty. Just down here, tap on it. How we overcome that is we practice without risk. So we give you fake money. I'm going to show you how. And we practice buying fake AI-generated assets so that you can take your money and buy fake assets over and over and over again. If you practice buying assets and you go through 100 sequences of a deal, when it comes game time for you to buy a real deal, you're way more educated. Fear comes down when education goes up. So if you want to register, go do it now. You've got like 30 seconds. We're going to peace out, Girl Scout. We're going to dip like a chip. Happy Friday. To register, tap on this guy. Adios. I'll catch you on the flip. I hope you learned something today. Was this helpful? Shelly, making that money, baby. Shelly's out there cashing. Let's go. Done, sweet face. Let's go. Let's go, sweet face. Peace, Macheo. Good morning. Good morning. Awesome. Awesome. I'm glad you got something out of this. I got to dip like a chip. I got to dip. I got to get out of here. I've got some homework I've got to get done for Sarah. She sent me an email, sign me homework. On it, boss. All right, peace. You'll have a great day. I'll catch you on the flip-flop. Adios. Enjoy your weekend. You too. Adios. Bye, Dean. Bye, everybody.